should not fund any more coal-fired power stations, coal mining projects ever. We should wind them down as quickly as possible because they are cooking the planet just like grey and blue hydrogen is cooking the planet.
Yeah.
You know, hydrogen, which is not made from renewable electricity, is releasing 10 to 16 times more carbon, let alone the methane, which is worse, than it is hydrogen. So we've just got to stop doing things which are self-harming under the guise of greenwashing.
So why are leaders so slow? Even if you look at the appetite for ESG investments, they're growing exponentially, so are emissions. So where are we allocating capital?
Okay, so take the recent G20. There's probably a reason why there wasn't strong action coming out of the G20 because people were not aware that major transactions between large companies were taking place now on green hydrogen, that actually this pollution-free all the way through the supply chain fuel was now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop using money into fossil fuels. It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, it's kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial, it'll never be supplied in the quantities we need it, you know, blah, blah, blah. Now we know, let's take action. It's practical, it's implementable, let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, you know, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn their gas. At least they're pumping up carbon and methane into the atmosphere, honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel you know which is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050.
Connection
that
lost.
means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
for that. I say we're not doing this for credit. We're doing this because it's the right thing to do, and sooner or later you have to believe that it'll come out. At the same time, Carly, I've known some executives, maybe you haven't, who literally manage their careers for how the credit they get. I knew one executive, fairly senior executive, who really spent an awful lot of time figuring out where that person ended up on a ranking every year by one of our magazines.
Well, yes. And, of course, I've known many people like that. We all do. And look, we all like to get strokes,
Sure.
right? So I understand. But I actually think it's even more difficult these days because technology is swirling around us and the affirmation or criticism is ever present, immediate, and omnipresent on social media. And so it's actually very difficult for people not to play to the crowd when it's in their heads and around them all the time. It's why I advise so many people, just put it away. Don't look at it. Now, by the way, I am not saying that leaders should not seek feedback.
Right.
Leaders should seek feedback. But that's different from always playing to the crowd, and some people spend their whole career playing to the crowd.
Carly Fearon, it's always such a treat to be able to talk to you. Thank you so much for your time. That does it for Balance of Power. And this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks holding near highs of the session as they continue to rebound from the lowest levels in over a year. As solid outlooks from retailers bolsters confidence in the economy despite supply chain and inflationary pressures. The S&P's up 88 points right now, up 2.2%. Again, close to session highs. We have got the Dow up 594, up 1.9%, a 3% rally for the Nasdaq Composite Index, up now by 344 points. The Nasdaq 100 Index up 3.1%, 10 years down 5/30 seconds, 10-year yield right now 2.76%. Spot gold down $4 the ounce, down 0.2% to $18.49. West Texas Intermediate crude down now by 3.6%, $114.35 a barrel on WTI. Well, as for the interest rate outlook and the market, Winnie Caesar is global head of credit strategy at Credit Sites, and she was interviewed this morning on Bloomberg Surveillance.
It is absolutely true that when you have the Fed tightening monetary policy, particularly at an aggressive rate, you generally tend to see volatility in risk assets. We know now from yesterday's Fed meeting minutes that 50 basis point hikes are effectively foregone conclusions for at least the next two meetings. So I would say that volatility is probably going to be the name of the game for the next quarter or so.
Broadcom is buying cloud computing company VMware for about $61 billion in one of the largest tech deals of all time, turning the chipmaker into a bigger force in software. Broadcom up 3.9%, VMware up 3.8%. Macy's higher, surging after raising its profit forecast. Right now, Macy's shares are jumping by 19.2%. Recapping, S&P up 88, a gain of 2.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, yeah, we're going to talk markets. Right now we're talking about flying.
Yeah, because we're with Mike McKee right now, and I don't know if you follow Mike McKee on Twitter, you know that his Twitter profile for location, it says somewhere in the skies, I think, because you travel so much.
Well, we're definitely seeing some of that because airlines is certainly a standout sector.
Back. So many people.
Right? Yeah.
Too many.
All right, we're going to talk about that. Welcome, everybody, live in our Bloomberg Interactive Broker Studio. You can catch us on YouTube right now. This is Bloomberg Business Week. And as for the markets, risk on trade, buyers over sellers, definitely dominating today's equity trade, Tim.
Yeah, solid outlooks from retailers, a few other factors. We're going to get into that in just a moment. A lot going on, though, when it comes to tech, including our most read today. It is official, Carol, Broadcom buying VMware for $61 billion. It's one of the largest tech deals of all time.
Yeah, it's a big one. Plus, this week's Business Week cover story and how the tech route isn't just cyclical, it's well earned and overdue. We're going to get into that. And that tech route, by the way, also tripping up the Tiger Cubs.
And then the latest with Elon's funding plans to buy Twitter. Plus, she worked with the U.S. Secret... no, he's not done, and he's still tweeting a lot. She worked with the U.S. Secret Service for a decade and says it is possible to prevent school shootings. We're looking forward to that conversation.
One of our really tough stories this week and realities, to be quite honest. We're also going to wrap up the show with the CEO at Zero Gravity Corporation, an update on space tourism and training. We've got so much to get to. But first up, we got to get to the Market Drivers Report. And let's set the Business Week agenda. The one and only Michael McKee, the world traveler, international economics and policy correspondent at Bloomberg News, knows all the good lounges in the airports where to go. Hi, Mike McKee.
Hello.
Hello.
I was in Washington yesterday, which is not very exciting.
But you do.
Did you fly?
Yes.
Okay.
Yeah.
Do you like flying over train?
It depends on where I'm going. I mean,
Yeah.
I was thinking about this last night. If you fly from Washington, because the airport's so close to downtown, you can get back here in 2 hours total from the office to
That's
home,
faster than the Acela.
which is faster than the Acela.
All right. See, it's all about math. This is what
Unless
we do.
unless there's a thunderstorm.
Well, yeah, unless your flight's delayed.
Then you spend the night in Washington.
That's so true in the summer. Like, you've got to watch the weather and decide. Okay, so speaking of forecasts, let's talk about the economic forecast because we've had a big data dump this week, including some data points today. So how does it feel, Mike? Or what's the reality of it?
Well, I think you have to be careful at drawing conclusions quickly.
Yeah.
But there are some signs pointing in a certain direction. I don't want to use the green shoots analogy that Ben Bernanke had to keep using for months and months and months. But what we're seeing is things like pending home sales today down 3.9% after new home sales were down significantly earlier this week. Existing home sales were down. We're seeing a number of indicators slow. The Philly Fed this week and the Kansas City Fed and the Empire, which is the New York Fed, all come in surprisingly under estimates and down from the prior month. So that's what the Fed wants to see. I mean, they're raising interest rates, and one of the things they're taking credit for is good communications, because the market has raised the interest rates much more than the Fed has at this point, but that's having an effect. And one interesting thing today, Freddie Mac, which does a weekly compilation of mortgage rates, noted that the average mortgage rate had gone down because people are not applying for mortgages.
And the magnitude of that decline was big too.
Yeah.
So, okay, so I'm glad you mentioned
We
that.
actually talked with somebody from Freddie Mac, right? Wasn't it Freddie Mac? Yesterday.
Yeah, yesterday.
Yeah, sorry.
Chief Data Officer.
I told you, I didn't get much sleep last night. No, and really tried to push in terms of activity, and he had to be very careful.
Yeah,
Government-sponsored entity, and we respect that.
He focused on the data.
He did focus on the
He reminded
data.
us over and over again he's not an economist. I'm glad you mentioned that
But he
this
plays
is
one on.
this is kind of what the Fed
He sees
the
the
Fed
data.
likes this kind of slowdown is what the Fed wants to see, because I think that's been lost in the conversation of late. You know, with inflation running so hot and the Fed focused on bringing down inflation, a pullback such as this is kind of welcome.
Well, it's the first steps that you would expect to see and hope to see in the inflation fight, that the economy would start to slow down. And then that would make inflation a little bit less likely. And the question is how far you have to go to bring it down significantly. This is a completely different situation from one we've ever faced before, which I've said many times, but a certain amount of this is going to go away because it's based on reopening an economy. I mean, we're seeing incredible rises since we started with airplanes in airfares, except they're just getting back to kind of where they were before the pandemic. So on a percentage basis, they're going up, but at some point they're going to level out because there's going to be demand destruction. You're just not going to fly if it keeps getting more expensive. Same thing with hotel rooms, and we've seen it with used cars now. So it's kind of what you would expect to see, what you would want to see, except for the fact that higher interest rates also hurt stock prices, which is not what people on Wall Street want to see.
But, you know, what we're seeing today is certainly a different mood when it comes to risk on. I want to talk briefly about airplane prices, because I haven't tweeted about this, Mike, but last week I was buying some tickets to go to Cincinnati in a few weeks. And a few weeks ago I bought tickets for another trip to Cincinnati. The flights were actually cheap relative to what I thought they were going to be and relative to what I had paid just a few weeks before.
So cheaper.
Way
Less
cheaper.
expensive.
I was like, I don't want to say this right now, but are airfares coming down?
There's no indication that they've been coming down.
In fact, the data that we saw was...
People who follow this closely say they've been going up, but you'd expect that because this is going to be the big travel season, and everybody has been sitting at home for 2 years, and they're anxious to go somewhere. But a lot of it depends, too, on where you're going. And
Nobody's going to Cincinnati.
I'm not making any comment.
Sorry, Cincinnati.
But how much demand there is. And Cincinnati used to be a hub for Delta, and it's not really anymore. So perhaps there's less demand than there used to be. That's what
Amazon's Prime Air has taken up a lot of the space there. We could talk planes forever, Carol. Sorry.
It's okay. I like planes too.
The plane boss.
The planes. What's the next data point for you that you got your eyes on? Just quickly.
Well, next week is jobs on Friday, and that's going to get everybody's attention just because it's jobs. And then we look to the inflation numbers. We get an inflation number tomorrow, the PCE index.
It's going to be hot tomorrow, though. 8.1. Or no, that was today. Sorry, it's expected to be hot for PCE tomorrow,
core,
right?
We're talking about what 4.9.
Tomorrow we're talking 6.2 because the PCE is different, constructed differently.
Okay.
You can have me back tomorrow and we can spend 20 minutes explaining
All right, we'll do that.
Well, we'll give you 10 or 7 or 5. Michael McKee, he is, of course, our international economics and policy correspondent here at Bloomberg News. All right, let's get to world and national news.
Nancy Lyons is standing by in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Law enforcement authorities in Texas are facing questions and criticism over how much time elapsed before they stormed an Uvalde elementary school classroom and put a stop to the rampage by the gunman who killed 19 kids and 2 teachers. Authorities say the gunman spent 40 minutes to an hour in the school. U.S. Border Patrol Chief Raul Ortiz explains.
Our officers, when they engaged, they were doing everything they could. There are broken windows where agents were trying and officers and law enforcement personnel were trying to evacuate some of the children.
Ortiz defends his officers, saying they did take action. Well, it could be a sign of the partisan divide ahead on guns and domestic terrorism. Today, Senate Republicans blocked a bill to put a greater emphasis on the threat from white supremacists. It was proposed following the mass shooting in Buffalo in which blacks were targeted. Actor Ray Liotta has died at the age of 67. According to his publicist, he died in his sleep while filming Dangerous Waters in the Dominican Republic. His iconic role was playing Henry Hill in Goodfellas.
It was easy for all of us to disappear. My house was in my mother-in-law's name. My cars were registered to my wife. My social security cards and driver's licenses were phonies. I never voted. I never paid taxes.
Liotta also played Shoeless Joe Jackson in Field of Dreams. Film critic Jeffrey Lyons reflects on Liotta's work ethic.
He was a working actor. He wasn't a major, top-of-the-line, bold-faced movie star. That didn't interest him. What interested him was the work.
Again, Ray Liotta dead at the age of 67. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stenovic, we are back at home base in New York.
Yeah, New York. We're here in the Interactive Broker Studios in New York City.
Oh my God, oh my God. All right, Apple, Debbie Wu. There's actually a few stories about Apple on the Bloomberg terminal. This story, though, Apple planning to keep iPhone production roughly flat in 2022, a conservative stance as the year turns increasingly challenging for the smartphone industry. We look to Apple often as an idea of what consumers are up to. I mean, they affect a lot of different companies, and they tell us a lot about what's going on globally.
Yeah, they've got a real, exactly, global
Right?
footprint. Exactly. The company's asking suppliers to assemble roughly 220 million iPhones. It's about the same number as last year. That's according to people familiar with its projections. They asked not to be named because these are not public projections. Market forecasts have hovered closer to 240 million units, driven by an expected major update to the iPhone in the fall. But the mobile industry has gotten off to a difficult start to the year, and production estimates, they are down across the board.
Yeah, I mean, Apple, I guess our team reached out and they declined to comment on the outlook, which could change depending on the economy and supply constraints in the coming months. Apple doesn't disclose its production targets and stopped disclosing how many iPhones it sells. They started that back in 2019. I have to say, although it's a risk on trade today, and Apple shares among those gaining, it's up about 2.3% in today's session, but it's down 19% so far this year.
The company did warn earlier this year that supply problems will impact sales. They gave some numbers there, $4 billion to $8 billion, this in the current quarter. That's largely due to COVID-19 lockdowns. Those are roiling production lines in China.
Yeah.
And the whole tech industry is bracing for a slowdown in consumer spending because of rising fuel prices, rising material prices, pushing up the cost of everyday essentials. So if you're paying more for those things, maybe you're not going to shell out for an iPhone as soon as you think you need one.
Although I was just going to say, I was talking with someone, it's like the stuff that we do at our iPhone, like I can't imagine not having this phone because it's how you kind of
That's
function.
how I rationalize the price. I think to myself, how much time do I use it, each day?
Editing our notes, like,
Yeah,
you know,
on the
were
plane.
You were like, what? I was like, I was doing it on my phone. By the way, Apple.
I thought you were just watching Netflix.
No, I wasn't. Apple, no. Apple, by the way, also raising salaries for workers in the U.S. by 10% or more as it faces a tight labor market and the spread of unionization efforts across its retail stores. So trying to probably fend that off. You are listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to rebound from the lowest levels in over a year as solid outlooks from retailers. Macy's, case in point, up now by 19.3%, bolsters confidence in the economy despite supply chain snags and inflationary pressures. S&P up 88, up 2.2%. The Dow up 588, up 1.8%. Nasdaq up 342, up right now by 3%. 10-years down 6/32, 10-year yield 2.76%. Spot gold down $3.60 the ounce to $18.49, a drop of 0.2%. West Texas Intermediate crude up 3.9%, $114.56 a barrel on West Texas Intermediate crude. Southwest Airlines is raising its guidance for second quarter operating revenue, citing strong travel demand, even in the face of inflation. Southwest Airlines shares, they're flying higher now by 6%. And Delta cutting flights just ahead of the busy Memorial Day weekend and right through the summer travel season to give it the ability to recover faster from bad weather, higher than expected worker absences, and other issues that have rattled recent operations. On a day when all the airlines are advancing, Delta shares up now by 6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic back in our Bloomberg Interactive Brokers weekend.
It's not the weekend.
Studio, no. But it was just this past weekend that the news broke that Broadcom was said to be in talks to buy VMware. Well, it became official this morning.
Dina Bass is Seattle Bureau Chief for Bloomberg News. Dina joins us now on the phone from Seattle. We got some more details thanks to you and to Leanna Baker, Dina. $61 billion. It's a record tech deal. There's a go shop provision here. What else does our investor audience need to know?
Broadcom is basically saying that VMware is going to become the new name for its software business. It's going to become the focus of a software business that they've been building for the last couple of years. There is also a go shop provision in here, though. So VMware can, for a limited period of time, try to find other bidders. So we'll see if that creates additional late-breaking drama in this deal.
Boy, it's good to be VMware, right? I guess at this point, I mean, who else wants it or who should want VMware, Dina?
VMware has partnerships with all of the major cloud companies. And the closest one is with Amazon's cloud business. So we're talking Amazon, Microsoft, Google. The problem is that in the current regulatory environment, it's going to be difficult for any of those companies to put together a deal potentially. That's going to be a little hard with the scrutiny that regulators are putting on large tech. Intel, another chip maker, obviously, Intel's CEO used to be the CEO of VMware. Cisco is another name that's been mentioned, but we don't know what's going to happen from here on out.
All right, so we have a very smart audience. I know that. But if they're not familiar with Broadcom and VMware, what is it about these companies? What do they do, and what is it about them that maybe makes a good combination?
Well, you have to look back at Broadcom's M&A strategy over the past couple of years. They're a hardware company, a chip maker, but in order to reduce their exposure to the cyclicality of the chip industry, they've been buying up software companies. They bought a big part of Symantec. They bought CA Technologies. And part of what they do when they do that is almost a private equity-like strategy. They look at these companies that are a little bit more mature, but have solid, successful product lines that they can, continue running and bring in money and wring costs out of at the same time. Software tends to be a more regular flow of revenue than hardware and chips in particular, which are, as I mentioned, very cyclical. So when you look at VMware, you have a company that pioneered a type of software called virtualization software. And even though that technology is being surpassed by the sorts of things people are using more frequently in the cloud, they still have a very strong position. They're still very deeply embedded in a very large number of corporate networks. Their software basically helps you reduce the number of servers that you have to use and cut costs.
Well, I think about where we were yesterday, Informatica in Vegas, right? And this was, yes, cloud, but it was also about taking data, making it intelligent, doing lots of different things with it. Like it's just this, I feel like there's a lot of crossover happening within the tech industry.
Right, with so much data
it's
out
not
there,
just
the
cloud,
question is how do you make it valuable to different customers? So Dina, what does Broadcom end up doing with VMware now? Why are these companies better off together than they would be by themselves?
Well, VMware has been in a tough spot for the last couple of years. There's been a lot of financial engineering going on around the company. So if you go back historically, VMware was a very successful startup, was bought by EMC, and probably the most valuable tech deal, in the history in terms of what EMC paid for it and what it ended up making them in money. But then EMC gets bought by Dell. VMware has been, spun off from Dell back into, there's been a lot of back and forth about what's going on with them. And while that's going on, they've been trying to come up with a strategy to deal with this legacy product line that I talked about before, this virtualization software. How do they modernize? How do they regain the leadership role they once had in a market that's bypassed them? And so they've been investing in a lot of different areas, like security, mobile device management, networking, but still the vast majority of their revenue is coming from this older software. So they've been struggling to figure out what the strategy is as a standalone company in terms of how they're going to continue growing. Their revenue growth has ticked down into the single digits, where 3 years ago, it was in the double digits. So that's been challenging. Being owned by Broadcom frees them from having to worry about that. Broadcom, I spoke to Broadcom software president Tom Krause this morning, and he said, look, yes, they're a single-digit revenue business, but that's the type of business we run very well. And so VMware gets to be, outside of the stock market scrutiny around its growth rates, and Broadcom will try again to squeeze costs out of it and focus on profit of this aging product line.
Hey, Dina, what's going on just more broadly in the tech industry, especially as we've seen kind of the big tech really under fire, if you look at certainly the performance in the equity markets this year so far, but there's been a lot of tech deals, right, and some big ones this year.
Sure. Obviously, there's Microsoft Activision at $69 billion. You said earlier, this one's the biggest tech deal, but that's only if you consider Microsoft Activision a gaming or entertainment deal, I suppose. What we're seeing right now is kind of a confluence of different potentially conflicting factors. So companies' valuations are going down because the market is going down. So acquiring a company becomes potentially cheaper. That said, the company doing the acquisition, if they are doing it by stock, well, their stock is going down too. So you have to weigh that. And we talked at the top of this conversation about the increasingly difficult regulatory environment around large deals. So you have a couple of different forces pulling on things, but valuations are going down, and that may enable some more opportunistic buying for those buyers that can get their deals approved by regulators and have the cash or the stock to do it.
Kind of fascinating just to see what's going on in what is, so far, I feel like a very crazy financial market year. Dina explained so much. Thank you so much. Dina Bass, she's Seattle Bureau Chief at Bloomberg News, joining us on the phone from Seattle. So again, right, we heard about the deal just not even a week ago, and here you have it.
Yeah, but in just a few minutes, we're going to talk about today's big take, which is about, the troubles brewing in tech.
Yeah, exactly. This will get you thinking in a big way. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. We are here at Bloomberg headquarters in New York City. This story, you think it's been dealt with, but it's a reminder that there's still a lot going on when it comes to opioids, the settlements, and the drug cases.
Yeah, I mean, we just recently learned, Carol, that the CDC said that there were an estimated 107,000 drug overdose deaths in the U.S. during 2021.
Most of those opioids.
Exactly.
All right, we're going to get into that in just a moment, and some special work that's being done over at Johns Hopkins Bloomberg School of Public Health. We'll get to that in just a moment.
First, though, a check of the markets. We're less than 90 minutes away from the end of the trading day. What's going on, Charlie Pellett?
We are higher across the board. A lot of people like what came out of Macy's this morning. Macy's shares up now by 19.4%. Stocks continuing to rebound from the lowest levels in over a year. Solid outlooks from retailers bolstered confidence in the economy despite supply chain snags and inflationary pressures. A slide in mortgage rates by the most since April of 2020, and Broadcom's $61 billion acquisition of cloud computing company VMware also is boosting risk appetite. Right now, Broadcom shares up 3.6%, VMware up by 3.5%. The Dow up 581, up 1.8%, S&P up 87, up 2.2%, Nasdaq up 336, up 2.9%. Broad-based rally, Russell 2000 up 2.5%. 10-year yield 2.76%. Spot gold is at $18.50 the ounce, down $3.35 the ounce, down 0.2%. And West Texas Intermediate crude oil up for a second day. WTI up 3.5%, $114.17 a barrel, after U.S. crude and gasoline stockpiles declined further as motorists prepare to take to the road for the summer driving season. And with gasoline at records across the U.S., expect even higher prices to come. This according to Amrita Sen, Director of Research and founder of Energy Aspects in London.
We are very short of refining capacity. We have a few refineries starting up in the next couple of years and even back half of this year, but not nearly enough to meet demand. So we are constrained on both sides, but right here, right now, I'd say we are more constrained on refineries. So the oil you and I would consume, that's more constrained than actually the crude oil side of things, which in itself is a challenge with OPEC spare capacity low.
And right now we do have oil companies pushing higher. ExxonMobil, for example, up 0.4%. BP up by 1%. Chevron is gaining 1%. EOG Resources up 0.5%. Pioneer Natural up by 0.5%. Recapping our rally underway with the S&P up 86 now, up by 2.2%. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So more Americans died of drug overdoses in 2021 than any previous year. Tim mentioned these numbers. More than 100,000 Americans. That's up 15% from the previous year. More than 80,000 died using opioids. And just yesterday, we got word that Teva will pay $110 million to settle opioid-related claims. That's just in West Virginia. And remember, earlier this year, Tim, there was news that 4 of the largest U.S. corporations have agreed to pay roughly $26 billion to settle a tsunami of lawsuits linked to claims that their business practices help fuel the deadly opioid crisis.
Well, we've got an expert voice with us to talk all things when it comes to the opioid epidemic here in the United States. Dr. Caleb Alexander is professor of epidemiology at the Johns Hopkins Bloomberg School of Public Health. Dr. Alexander is, we should note, has been an expert for plaintiffs in opioid litigation. Dr. Alexander, how are you?
Fine, thanks for having me.
Well, you've been working on something. You've been developing the Opioid Industry Document Archive. It's launched by Johns Hopkins University and UCSF. We should note that Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. What is the Opioid Industry Document Archive?
The archive is an effort to shine the bright light of day on millions of documents that have been generated through ongoing opioid litigation. It provides an opportunity for members of the public, bereaved who have lost a loved one, researchers, historians, legal scholars, and others to be able to examine the corporate practices that has contributed to the worst drug epidemic in our country's history.
You know, what's fascinating to me, Dr. Alexander, and I think about this when any of the drug companies seem to come to a settlement to settle those opioid-related claims, they usually say, well, we did nothing wrong. When you look at this archive and you are able to see these documents, is that not fair of them to say that?
Well, it's an excellent question, and I should start by saying that it's unusual that out of litigation we get this opportunity to actually put these sorts of documents in the public domain. All too often, unfortunately, these documents remain sealed, and the public never has an opportunity to actually see these types of internal corporate communications, emails, presentations, sales reports, budgets, and the like. And, you know, I don't think we would be seeing settlements of billions and billions of dollars. You just pointed out the one for $26 billion with 4 of the country's largest corporations. I don't think we would be seeing settlements of that magnitude if there wasn't wrongdoing that had taken place.
Dr. Alexander, we are getting, you know, thanks to the Opioid Industry Document Archive, to some really great work by journalists who've dug into this over the last few years. We are getting a good understanding of what some companies have done with regards to their marketing of these pharmaceuticals. The cat, though, is out of the bag, and the proof is in the pudding. As Carol mentioned, more than 100,000 overdose deaths here in the United States just last year. What now does the United States do? What can we do to start preventing these deaths and to get these numbers to come down?
Well, there are many abatement activities that are underway in cities and counties around the country. And we know, for example, that there are highly safe, highly effective FDA-approved treatments for opioid addiction, and we need to scale these up massively. But the real focus of the archives is really to allow for us to learn what took place within these corporations so as to prevent these sorts of activities from occurring again. And we have a precedent, which is tobacco. The opioid archive sits upon a prior archive of tobacco industry documents that's been used for decades to reveal industry strategies, to question science, cast doubt about the health harms of its products, and delay public health regulation. And using those documents, there have been very important policies put in place regarding tobacco, such as state and local ordinances mandating smoke-free public spaces and workplaces.
Well, we certainly could talk for a long time on this, and hopefully we can talk again in the future because we've unfortunately run out of time. But interesting and important work that you guys are doing. And as you said, it's not often that people have access, public access to all of the documents involved in cases like this. Dr. Caleb Alexander is professor of epidemiology at Johns Hopkins Bloomberg School of Public Health, joining us on the phone from Baltimore. Of course, the school is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies, and Dr. Alexander, as we said, served as an expert for plaintiffs in opioid litigation.
Let's go to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
The Cold War. To the contrary, we're determined to avoid both. But we will defend and strengthen the international law, agreements, principles, and institutions that maintain peace and security, protect the rights of individuals and sovereign nations, and make it possible for all countries, including the United States and China, to coexist and cooperate.
In his speech today, Blinken said this is a charged moment for the world and diplomacy remains vital. Gun control groups are pushing for action following the school shooting in Texas, which ended with 19 students dead. Shannon Watts with Moms Demand Action spoke at today's rally on Capitol Hill.
We are begging our elected officials to do something, anything, to address America's gun violence crisis.
Watts says 90% of Americans support common sense gun safety laws. Former President Donald Trump will have to answer questions in a civil investigation underway in New York. That's the ruling of a state appeals court, which means Trump and his 2 eldest children, Don Jr. and Ivanka, will have to also testify in Attorney General Letitia James' probe of the Trump business. Trump had appealed the ruling, seeking to overturn what the lower court had ruled. His lawyers argued that ordering the Trumps to testify violated their constitutional rights because their answers could be used in a parallel criminal investigation. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So we continue to see definitely an evolution in the tech industry. Growth is off, and we continue to feel like we're seeing a lot of companies pare back on their workforce.
Yeah, belt tightening is the way that I'm thinking about this. PayPal is among the latest to begin laying off staffers. This by our own Jenny Serrain, who writes that staffers who worked in risk management and operations this week were laid off as the firm seeks to shore up profits after growth and spending on its platform stagnated in recent quarters.
Stock, by the way, down 57% so far in 2022. It's up about 0.9% in today's session. The company laying off dozens of staffers who worked in Chicago, Omaha, Nebraska, and Chandler, Arizona. According to those familiar with the matter who asked not to be identified discussing private information, PayPal this month also announcing plans to permanently lay off more than 80 people in its headquarters in San Jose, California, according to filings with that state.
The company did say in a statement, PayPal is constantly evaluating how we work to ensure that we are prepared to meet the needs of our customers and operate with the best structure and processes to support our strategic business priorities as we continue to grow and evolve.
You know, you do wonder, Tim, as we kind of come out of the pandemic, we're not done, that's for sure, if you look at some of the numbers and the statistics, but we are figuring out, because of vaccinations and boosters, look at how much flying you and I have done and how much traveling in just a couple of months, how to work within it and how to live within it. At the same time, I think there was a lot of expectations, especially for some of the pandemic plays, perhaps, I don't know if PayPal would fall under that growth would continue coming out of it. And I just feel like, again, I know I use this over and over, but this recalibration, getting back to kind of a more pre-pandemic level.
Well, it's interesting you say that because PayPal hired like crazy during the pandemic.
Right?
Check these numbers out. PayPal's headcount climbed in recent years as the firm ended last year with 30,900 employees. Carol, that's a 33% increase from pre-pandemic levels. We should note that we've seen hiring freezes and job cuts across tech, Uber, Peloton, Klarna, Robinhood, Netflix, Carvana, just to name a few.
Yeah, it's a really, really long list. So anyway, one of the names that we are keeping an eye on in the tech sector. We're going to talk more about big tech. It's the cover story of Business Week. That's coming up next. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We have got a widespread rally underway. The Dow, the S&P, NASDAQ holding close to session highs. 84-point gain right now in the S&P, 4,062, up 2.1%. The Dow's up 560, up by 1.75%. The NASDAQ Composite Index is up 322. For NASDAQ, a gain now of 2.8%. The 10-year is down 3/30 seconds. The 10-year yield, 2.75%. Spot gold down $2.50 the ounce to $18.51, drop of 0.1%. West Texas Intermediate crude oil up 3.5%, $114.14 a barrel on WTI. Stocks, they're rebounding from the lowest levels in over a year as solid outlooks from retailers bolsters confidence in the economy despite supply chain snags and inflationary pressures. Macy's shares after earnings surging by 18.9%. Lots of earnings after the bell today. Among some of the names reporting will be Gap, Costco, Dell, Workday, Zscaler, Autodesk, and American Eagle Outfitters, among many others. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, I feel like this is so relevant to so many conversations we are having, and I think even when we're out in Vegas and talking about tech and what's going on. Well, the cover of the new issue of Bloomberg Business Week, it's also today's Bloomberg Big Take. It's how the tech rout isn't just cyclical, it is well-earned, and it is overdue.
The story by Brad Stone and Lizette Chapman, it's this week's cover story, as Carol mentioned, is available on newsstands, on the Bloomberg, and at Bloomberg.com/businessweek. With us now to tell us all about it is Jeff Muskus, Senior Features Editor for Bloomberg Businessweek. He's with us in the Bloomberg Interactive Broker Studio, along with Joel Weber, the editor of Bloomberg Businessweek, who's with us as well. Joel, so all good things must come to an end, and it's certainly seeming like that's happening in Silicon Valley.
Yeah, we kind of called the bottom, and now it's coming out. You know, NASDAQ 2 days, it's creeping back out since we kind of put the finishing touches on
Joel
our
Weber
tech
said it. It's official.
There we go. It'll all regress tomorrow, I'm sure. But basically, you know, we do a tech issue every year, and what we really wanted to talk about here, and it became impeccably fortunate timing because it's like the world caught up to the ideas that we had in this package. Is everything has started to change. The VC-backed funny money when money was free led to a lot of exorbitant ideas and investments and SPACs and crypto, and we're seeing a regression to the norm, I think. And what Jeff really set out to do, and as the architect of this package, and Brad Stone and Lizette, like you mentioned, wrote the cover story, which I think is today's big take, which really sets the table. But there's a lot of other things in this package that help kind of amplify this idea. So Jeff, being the guiding hand that put all of these stories together, like what were you setting out to accomplish?
Sure. Well, like you said, Joel, we sort of started out from the position of, okay, well, here we are sort of returning to varying degrees of a new version of normal as people return to their offices and that sort of thing. And so for the first time, really in 2 years, we're taking a sustained and marginally less COVID-inflicted look at where is the tech industry now, where are all these big name companies that many of us haven't been looking that squarely at for the past couple of years, and what does the tech world look like now and where is it going? And with that in mind, a lot of our best writers and reporters here at Bloomberg News and on the tech team took a look at some of our biggest bold-faced name targets from Instagram and TikTok to Google and all the way down. And then, sort of looking forward to where's the tech world going, we have a bunch of interesting looks both at things like prediction markets that are sort of on the bubble of regulation and biotech stories like this look at what are called better odds babies, the science of polygenic risk scoring that might well just be the next big thing.
So one of the things that I loved about the package was like there's serious stuff, but then there's like the perfect encapsulation of everything that Jeff's talking about. Remember the scooter craze?
Oh yeah, Bird, Lime.
And start to feel a little bit like a segue now. It survived the pandemic mostly, Jeff, but why was it such a perfect story to include in this context?
Well, like you were saying a minute ago, Joel, right before the pandemic, the bottom started to drop out of this wave of basically decade-long cash burning as a means of not just survival, but as the main strategy for a huge part of the venture-backed tech industry. And so the scooter craze was well suited for that moment, where the whole deal was, okay, well, this or that mega fund is going to give you guys 9-figure checks on the regular to go out and build an explicit monopoly. Now go do it. And coming out of the pandemic for a variety of reasons, or as people start to need things like scooters. Again, we come back to find these companies sort of clinging to life to varying degrees and without the easy access to capital that everybody got used to.
Hey, Jeff.
Reasons, or as people start to need things like scooters. Again, we come back to find these companies sort of clinging to life to varying degrees and without the easy access to capital that everybody got used to.
Hey, Jeff, I feel like one of the things that I feel like with every guest, and you often hear like pets.com, like, are we likening exactly? Like, are we likening like this tech route that we're seeing? Is it similar to what we saw in 1999, 2000? I mean, are those comparisons fair, or is it different?
I think we're still a ways off the sort of industry-wide carnage that we saw at the end of the dot-com bubble. But Brad and Lizette are smart to draw the comparison, at least in terms of the hype machine, between the sort of infamous Pets.com
Super Bowl
ads and the Super Bowl ads we saw this year with all those crypto celebrities.
Yeah, the crypto pets comparison.
My favorite was the Larry David one, because I'm just a big Larry David fan.
I don't know. There were some other ones that are pretty good too. But,
nice.
So, what does VC actually have to say about this? Because that figures into Brad and Lizette's story, to bring it back to today's big take, right? Like, because they're undaunted, really, right?
Yeah, for what it's worth, most of the sort of mainline VC types that you would want to talk to and that Brad and Lizette went out to for this kind of piece, kind of said, well, the next thing is coming. Like this is going to expose the businesses that aren't ready for the next moment for what they are, and the people who have done the work to prepare for a storm like this are going to be just fine.
Well, and more new money keeps coming in, right?
Well,
I mean, there's been
right.
we talk about all these startup companies that are able to stay private for 10 years, right? And they don't have to tap the public
And
markets.
just yesterday, Carol Andreessen Horowitz announced a record $4.5 billion fund for crypto.
Yeah.
Just for crypto.
Top.
Or, I mean, it could have been a long time in the process.
Or chasing the next big thing and trying to figure out where it kind of goes from here.
And so I think, just again, to bring it back to Brad Stone and like why we wanted to do this on the cover, it was like there is a controlled burn every once in a while that hits, and like that's kind of what it feels like right now, where it's like, let's suppress some of the funny money, let's go back to basics. And while that's happening, I think we talked about this yesterday with Sarah Fryer on the show. It's like even the Metas of the world have to look at themselves in the mirror and realize that TikTok is eating their lunch, and they have to basically take their business model and basically come up with a way of fighting back, right? And like even Meta has to deal with this stuff, right? The biggest companies in the world. So tech's obviously ever changing. It's why it makes it so much fun to talk about. But even the sacred cows, there comes a moment that everything is cyclical.
Yeah, it is pretty remarkable, right? It's the big tech that are having to kind of do some soul searching.
That's right. Whereas the last couple of times we sort of talked about something like this, as Brad and Lizette point out in the piece, it was something that the rest of the industry could more or less look at or call out as an outlier, a Theranos or even a WeWork. The damage here, as you were saying a moment ago, is too broad-based to just sort of ignore as the cost of doing business.
Great timing.
We just do it every week.
I told you, I want that Joel Weber crystal ball.
Remember, Joel called the bottom.
Yeah.
All right.
Remember this day. Remember, no pressure, no pressure. Joel Weber, he's the editor of Bloomberg Business Week, and Jeff Muskas is senior features editor at Bloomberg Business Week, both in studio. This is the cover story, now on newsstands, online, and on the Bloomberg. This is Bloomberg Radio.
Countdown to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Kriti Gupta in the house. Will Taylor Griggs is out, joined now by our colleagues Carol Massa, Tim Stenovic. After a whirlwind tour to Las Vegas, they are back, and we are across platform, TV, radio, YouTube.
Vegas.
And talk to us about...
Carol, did you buy a hat in Las Vegas?
No, we actually ran out of money. We lost all our money, so we
Did
had to
come home
come
with
back.
the unicorn, though.
Oh, did that take a seat of its own?
Well, it was a unicorn, but then it had a down round, so it's no longer considered a unicorn.
Interesting. There's going to be a lot of them in the private markets. We'll discuss a little bit. But talk to us about the public markets right here, right now, because we are up.
Yeah, we're up, and I know we're focusing a lot on retail, but I will see everyone's retail and raise you to airlines. And it's not just because I did that whirlwind trip, but I mean, people are flying, right? And we did have Southwest and JetBlue come out, upping their revenue outlooks. That group, airlines overall, up about 6.6% in today's session. Folks, they are up almost 30% since March 7th. And this is even as Delta is cutting some summer flights to deal with some of the pressure on operations. So people are flying, and we're seeing certainly those airlines move up as a result.
Well, I've got to go back to retail because we're certainly seeing it spur the stock rally today. This is the VanEck Retail ETF, and it's up more than 4.5% today. It's actually having its best day in more than 2 years. It's made up of U.S.-listed companies that get at least 50% of their revenues from retail. 25 members in it. They are all in the green today, being pulled higher by Dollar Tree, Dollar General. Of course, we heard from those companies earlier today. Those are surging. Wayfair and Lululemon also bringing it higher.
And some of the high-end ones, I mean, Williams-Sonoma, Macy's, across the board, really, we managed to see it. Let's have a look at what's happening across the board in terms of the risk-on mood, because we are at more than 2 percentage points in the S&P. That's 85 points on the upside. I will note volumes are lower by about 10%, so maybe not quite so much volume around buying as there is selling at the moment. The Dow Jones is up 1.8%. Really, your outperformers are the small caps and big tech. NASDAQ up 2.8%. But as I say, Russell 2000 up 2.4%. So both winning on the day, Kriti.
Yeah, let's take a look at this on a sector basis, because as you pointed out, there are some major themes here, but not even on a sector basis. Consumer discretionary is really what's leading. I mean, no surprise here as we talk about some of those spending story, the retailer story, but also keep in mind, Amazon is part of the consumer discretionary. So in a way, it does get a little bit of a tech bid, but I mean, keep an eye on this. You'll see a lot of green on the screen, Romain, from top to bottom. I think the only, if we kind of zoom in there, the only thing you do actually see in the red is real estate, which once again is really just a yield story.
Yeah, well, you go back, of course, to the discretionary names, to the retail story. That is the story of the day, and really, you can't tell this story without talking about Macy's and numbers that it was interesting. I mean, 12% comp sales growth. Believe it or not, that actually missed estimates, but no, everyone kind of shrugged that off because the forecast was just so strong that I think everyone sort of said, okay, there's something working here, something working for Nordstrom and a lot of the other department store stocks. Macy's shares up about 18%, and then you go down the income spectrum to Dollar General and Dollar Tree. Dollar Tree right now up 21%, biggest day on record for that company on a percent basis after its comp sales came in well above estimates, and it raised its guidance going forward here.
Isn't that wild?
It is wild, but you know, look, they've been making a lot of changes to those stores. It's more than just
it's $1.25 now, isn't it?
It's $1.25, but more importantly, they've really diversified their offerings there, so it's kind of become a one-stop shop for a lot of people. And in fact, Dollar Tree and Dollar General have been stealing a lot of business out of the Walmarts of the world. So keep an eye on that space. And then NVIDIA and the chip stocks getting into bid. I do want to point out there are a lot of things that are down here, primarily in the healthcare space. Molina Healthcare down about 4 or 5% right now. There was a big downgrade over at a Bank of America, which downdated a lot of the health insurers, including Molina, Centene, and Oscar Health, Caroline.
Talking about what some of the banks have been saying, the upgrades, the downgrades, the calls. We've heard from Citigroup, of course, saying like maybe time to buy this tip in stock, saying there are some healthy returns. But notably, they're really saying the healthy returns are in Europe, are in the emerging markets. So interesting move there as we see. I don't know what's happening with that wild yellow line, but overall there are seeing stock valuations.
It's like a fat finger trade.
Well, yeah, we're gonna have a chat with our producer there. But overall, the US is really seeing.
That was my coffee mug. That was my coffee mug this morning as I was drinking. It was just kind of coming down the side. Sorry, that's pretty ugly.
Meanwhile, the main point is blue is higher, and that is the US. The valuations aren't nearly as beaten up as they are abroad.
All right, so I have to say, Caroline, you caught up with the CEO of Macy's, Jeff Gannett, and I feel like this is such an important conversation. Macy's really is kind of a cross-section when it comes to the American consumer that's out there and tells us so much about the health of the consumer. You had a lot of interesting points that he made. Here's one that he said. He said, the consumer is healthy. We have more active customers than we had a year ago. It's the highest in 4 years. Their spend is up. There's really good data when you look at the customer, it's healthy. And I think this was so significant. He also said bad debt is still very, very low. He does expect it to build. What stood out for you, Caroline, in that conversation?
I think what interested me was the way he broke it up into different income brackets. And he's saying, actually, yes, of course, 150,000 more in income, they're still spending. They're the luxury items. They're a bit worried about how they might react to the stock market, but he says, really, they're looking firm. But even the sub 75,000 earnings per year is still spending significantly at the moment, but on to go out goods. And he's worried about perhaps how much the rents will add up, the groceries will add up, the inflationary pressures on their pocketbook. But for now, they're willing to spend on their more luxurious items right there. I guess that's why inventory is so important at the moment. You need the right thing at the right price.
Yeah, I mean, it reminds me of what we heard from Bank of America CEO Brian Moynihan earlier this week at Davos, that the consumer is in a strong position. But at the same time, in the back of my head, I'm thinking about what we heard from Target and Walmart last week. Yeah. And there is sort of this bifurcation of consumers, right? The ones who don't necessarily, who are getting hit harder by higher gas prices and higher food prices.
But before you go too far afield from that, I mean, just go back to the inventory issue, Caroline, because, I mean, they talked about that inventory being higher. He seemed to suggest, at least in the Bloomberg story, that there was this idea that of all those people buying that sort of occasion-based, apparel, that a lot of that inventory buildup wasn't in that sector. It was all the athleisure stuff that I guess nobody's wearing anymore.
Yeah, he said you only need so many pairs of track pants now, and people aren't.
Well,
so
speak
that
for
is where you're
yourself.
sacrificing. You've decided you don't want to be getting another pair of tights, is how Taylor would call them, or your leggings, if other way you say it. But you are going to go and decide to save there, not spend. But that's why they're going to have to see perhaps some price action taken there and some deals. But overall, you are going to spend on perhaps that dress for a wedding.
But it comes back down to the business models at play here as well, because if you look at Nordstrom, if you look at Macy's, this is so different, to Tim's point, from Walmart, where it's everyday low prices, a price match guarantee. They can't actually pass on those costs to the consumers because they promised that they wouldn't, whereas Nordstrom and Macy's actually do have that luxury.
What's interesting, though, when we talk about inventory levels, just to wrap up, is just, whether or not they have the wrong inventory. Maybe they have inventory, but the wrong items, or they don't have enough inventory of the stuff that's in demand. The point is there's still demand out there for consumers. We'll just have to see how long that lasts. All right, guys, we're going to be back in less than an hour's time. We'll count you down to the closing bell. On this Thursday, our cross-platform coverage, our simulcast on radio, TV, and YouTube. Beyond the Bell, we're back at 4.
And we continue to count you down to the close.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
We bail early?
I don't think so.
Oh, okay.
Yeah, we got some time to hang.
I really did think Caroline's interview with the chairman and CEO of Macy's, Jeff Gannett, was really interesting. And he did talk about, the consumer feeling strong. Like she said, she kind of hit at different income levels, and that he wasn't worried about bad debt. They weren't seeing anything really now, but he is concerned maybe going forward. I mean, this is the thing. These data points are all looking backwards to many extent. What we care about is kind of what people are saying about the outlook and what happens, in terms of, do consumers keep spending going forward? Is that demand there, or does that start to come undone? And then that will certainly play out into higher prices, perhaps, or lower prices, and maybe bring down economic growth.
Yeah, it's the inventories that we've heard about. And I want to go back to what Michael McKee talked about at the top of our show about an hour ago. And he said some of the stuff that the Fed wanted to see is starting to happen.
Quickly, right?
Very
Feels like
quickly.
it.
Yeah, and it's because the market, even though the Fed has only raised interest rates, twice, 75 basis points, what has happened is the market has raised interest rates more so. So you're actually seeing pending home sales decline. You're seeing a number of indicators slowing as well. We saw
pending new home existing,
exactly.
Right? Yeah.
So it's happening in the real estate market.
Yeah, and I think that's a big one, because you buy a house and you end up really spending money in so many different ways, right? You're filling it with stuff, you're hiring contractors, you're doing different things. It's just, insurance, like it plays out in so many different ways. So I think that's a big metric that we need to keep an eye on. I want to say with inventories, what's interesting in that Macy's report too is some of our reporting has said that a lot of the retailers sometimes, to get ahead of those snarled supply chains, have been stocking up their inventories. But the problem is like Caroline said, if you end up with the wrong goods, that's not ideal, obviously.
No, that is going to cost you.
Yeah, exactly. And we see that playing out. All right, folks, let's get back to World and National News on this Thursday. All over it is Nancy Lyons. She's in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. Secretary of State Antony Blinken is outlining U.S. policy toward China. Bloomberg's Irv Chapman has more on Blinken's speech to the Asia Society today.
Blinken called China the most significant long-term international challenge, adding that there's no intent for a new Cold War with China, nor to change its political system. And as to Taiwan,
to our one China policy. We do not support Taiwan independence. We'll continue to uphold our commitments under the Taiwan Relations Act to assist Taiwan in maintaining a sufficient self-defense capability, and we enjoy a strong unofficial relationship with Taiwan.
Blinken said China would be countered by military modernization, strong alliances, and boosting the U.S. economy, adding that the technological competition is America's to lose. In Washington, Irv Chapman, Bloomberg Radio.
Gun control advocates are demanding action from lawmakers and brought their voices to a rally on Capitol Hill today. Connecticut Senator Richard Blumenthal, whose state was rocked by the Sandy Hook shooting nearly 10 years ago, spoke to the crowd.
I want to say a word to the gun lobby. Your days are numbered. You are on the wrong side of history.
Blumenthal says Congress needs to approve tougher background checks and a red flag statute. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control, including Everytown for Gun Safety. New York has announced that it is bidding to host the 2024 Democratic National Convention. Houston is also vying to host. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Hey, Nance, thank you so much. So you ready to sell your song catalog to Blackstone or Carlisle or whomever?
You know, if I had an amazing singing voice, I would, and we had the rights
you have
to...
a good speaking voice. It's so hard to, you know.
It is. It's not even close. So I would start to belt out some Justin Timberlake tunes because he's got some good ones. And guess what? He's just among the latest artists to sell a back catalog, this time to a Blackstone-backed fund.
Yeah, the deal was valued at just above $100 million.
That seems low to me.
Yeah, I guess.
Maybe because he's still like mid-career at this point.
$100 million. Dow Jones
back
reporting this.
catalog.
What do you think it should be, like $500 million?
I don't know, a couple $100 million.
I don't know. Yeah, I guess
If you look at what some of the other ones have sold for.
Yeah.
He's not Bruce Springsteen by any means with a catalog like that, but he's been doing this for 20 years.
Yeah. And it was actually to a Blackstone-backed firm, right?
Exactly, yeah, Blackstone-backed firm.
What is it? Hypnosis?
Hypnosis Song Management. That's according to Dow Jones. They cited fund executives. So this gives Hypnosis full ownership and control over the pop star's interest in some 200 songs that he wrote or co-wrote that spanned his career.
Well, what's interesting, this partnership that Blackstone formed with Hypnosis.
That's HIPGNOSIS.
Right.
That's why we're wondering if we're saying it right.
We might not be. Anyway, they got together in October. They committed an initial $1 billion to launch a private vehicle called Hypnosis Songs Capital, and it's created to acquire specifically music rights and manage those catalogs. According to the report, the New York-based private equity firm, which manages about $900 billion in assets, also took a stake in Took a stake in Hypnosis.
We should note that
this is a trend that we've been seeing.
It is a trend that we've been seeing. We've seen Bob Dylan do it.
Yeah.
We've seen Bruce Springsteen do it. Who else have we seen lately? There have been a
who
few
else did
more.
it, guys?
Also, the Blackstone-backed fund, we should say, is separate from Hypnosis Songs Fund Limited that does trade on the London Stock Exchange. It's purchased more than $2 billion worth of music rights. That's, again, according to Dow Jones.
I wonder how it feels as an artist, though, when you sell your entire catalog.
I don't know, to cash the check?
I don't know.
It's a liquidity event.
Rock your body, suit and tie, can't stop the feeling. Just a few.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ holding on to gains. We're off session highs, but right now the S&P up 74, up 1.9%. And this update is brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com. The Dow up 501 points, up by 1.6%. NASDAQ up 276, drop there of 2.4%. 10-year down 132nd, 10-year yield 2.75%. Spot gold virtually flat on the day now at $18.53 the ounce. West Texas Intermediate crude up 3.2%, $113.84 a barrel. Stocks continue to rebound from the lowest levels in over a year as solid outlooks from retailers bolsters confidence in the economy despite supply chain snags and inflationary pressures. Macy's after earnings surging 17.9%. Lots of earnings after the close of trading today. Among some of the names reporting: Gap, Costco, Dell, Workday, Zscaler, Autodesk, and American Eagle Outfitters. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie, and thanks for the heads up on all those earnings after the closing bell. Well, another one of our most read stories on the Bloomberg today, it's about the Tiger Cubs and other hot hedge fund managers that have been slammed in this year's financial market mood swing. A lot of it has to do with tech, too.
Oh, we've got back with us Hema Parmar, hedge fund reporter, who has just been absolutely crushing it when it comes to this beat lately. You've heard her on our air quite a bit. She is hedge fund reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studios. Hema, you've been reporting a lot on the Tiger Cubs, but also other hot fund managers who've been slammed as the market mood swings has certainly shifted. Why was this year so different for some of these hedge funds that concentrated in the high-flying tech companies?
So, we've been seeing a bit of volatility for a little while, but it's been short spurts of volatility last year. And what we're seeing right now is sort of a prolonged period of market drawdowns, and it seems to be consistent, and buying the dip really isn't working anymore. And so
I thought these guys are supposed to be smart in how to manage this volatility.
Yes, and unfortunately, the volatility's been hitting the tech stocks a great deal, and a lot of these Tiger Cubs are overweight and have been overweight in tech. So it worked for them for years. And then, obviously, it's not working for them now.
Is it normal that, when the overall broader market is so heavily in tech, kind of the mass investor, it's the same thing that the hedge funds are in? I always think that they're in something else. I don't know why I think that.
Yes, no, they're supposed to be more sophisticated. They can short, they can do all kinds of things. They can be diversified.
Right.
But some funds typically trade in similar strategies, and a lot of the Tiger Cubs, they were trained by Julian Robertson. They have a focus generally on tech and consumer. Some of the funds have been trading different things more recently, and we are seeing that in some of the performance. Some Tiger Cubs are doing worse, some are doing a bit better. It's just a matter of how much they've lost. They've all generally lost money.
Yeah.
Some have lost less, and I think that's because they have been trading a little bit differently. But still, there is a general focus on these companies that have really struggled.
I want to talk quit risk here because you've written about Gabe Plotkin. He's not a Tiger Cub, but you broke the story a couple weeks ago of his hedge fund shuttering. Are we going to start seeing more of that as these hedge funds have a hard time clawing back those losses?
It's a really good question, and I feel like a lot of people in the industry are asking this. The thing with Melvin is that they had a very difficult last year, prompted by this very strange Reddit phenomena, and then on top of that, they've been dealing with the volatility this year. So it's kind of been a double whammy. Other funds have been down a lot this year, maybe not as badly last year. So it really comes down to a fund, how much money it has on hand, how big it is, whether its investors stick with them, and that may dictate the degree to which that they can consistently keep going or that they can bounce back.
I love a quote in your story. I think it's the Deputy Chief Investment Officer of Evanston Capital, which invests in hedge funds, and she says, in terms of the quit risk, that's where a manager decides that the size of their losses are too large to climb out of. There is a tipping point, right? At some point where a manager has to look at their fund and be like,
I just can't.
I can't do it anymore.
Yes, yes. And you could argue that was the tipping point for Melvin. It was just a very, very steep hole to dig yourself out of.
Well, it hasn't all been bad news. Ken Griffin at Citadel has returned almost 13% in the first 4 months of the year. What do we know about what's been working for Citadel?
So Citadel is a multi-strat, multi-manager fund. Them and their peers, what they do is they take little pods of traders who trade different things kind of in silos, and they trade across asset classes. So they're a great deal more diversified. They're what's called market neutral, which means that they are supposed to trade not consistently with the market, like atypical of what the S&P is doing. That's supposed to provide steady results monthly that add up. Macro funds have also been doing really well. And these are, again, funds that are trading in more things than just traditional stocks, and so would have exposure to bonds and currency.
It's just a reminder of how much has been thrown into the equity market, right? If you think about it, like all the liquidity that's been out there and how much maybe, has been overexposed to equities versus when you hear about what Ken Griffin is doing over at Citadel, right? And which is kind of what you normally would tell an investor to be a lot more diversified.
And this is why allocators to hedge funds try to create a portfolio of hedge funds that do different things and to diversify that exposure.
So, I mean, look, we can't look into the crystal ball, but I'm wondering, based on your reporting and what you've been hearing from experts, if this is going to be a year of reckoning.
It definitely seems like it's going to be a difficult year, absolutely, because equity markets don't seem to be changing, greatly in the near future. A lot of these funds have invested in private companies, and there's an expectation that the valuations of these private assets are going to be drawn down. So there does seem to be a great deal of pain ahead. How funds navigate it will yet to be seen, and if there's creative ways to avoid it.
How about overall assets? Are we down a lot?
I don't believe we are. I think assets have still been growing into hedge funds.
Because how many times have you and I talked about in moments of uncertainty or volatility, and yet assets grow?
And you know what? Last year, when we saw that really terrible March, or maybe it was March 2020, that was when allocators, investors in hedge funds were saying, let's re-up on the guys that we like. And they had a very good year in 2020.
Right.
And so it's hard. You have to gauge, is this the time to get into them, or is this time to be pulling out? And I think allocators are thinking.
Well, we keep hearing from our Drive to the Close guest, Carol, that the Fed's not going to come to the rescue like they did, in the spring of 2020.
But you do wonder at some point, when something's so beaten down, at some point, is that just an opportunity? Like it just manages, just determine, you have to think about what's your time frame, right? And how patient you can be. Always fun to check in with what the hedge fund community is doing, and you are our go-to on this. Hema Parmar, she's hedge fund reporter at Bloomberg News. Check her out at Parmar Hema on Twitter. And you are listening to Bloomberg Radio. I'm Carol Massar, Tim Stanovic. This is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Coming up, we're going to get the latest tweets and talks and whatever from Elon Musk about will he or will he not buy Twitter?
What are we going to talk about when the story ends?
A lot.
Well, I don't think it's going to end anytime soon, so there's something there.
Other stuff.
Well, we are less than a half hour away from the close of U.S. equity markets. Charlie Pellet, what's going on?
Well, what's going on? We've got conversations about Twitter and Tesla coming up, so let's begin there because we're seeing a big move in both companies' shares right now. Twitter is rallying by 5.9%. Will he or won't he, as you correctly point out? Tesla, if we're talking Elon Musk, cannot ignore Tesla. Tesla shares rallying today by 7%. All part of a broad-based advance today. Retail strength certainly helping build sentiment today with Macy's shares up now by 18% as stocks continue to rebound from the lowest levels in over a year. Solid outlooks from retailers bolster confidence in the economy despite supply chain snags and inflationary pressures. We have got the S&P up now by 79 points, up by 2%. 28 minutes to go ahead of the closing bell. The Dow up 537, up 1.7%. NASDAQ up 293, up by 2.6%. The 10-year is down 1/32. 10-year yield 2.75%. Spot gold 18.52 the ounce. Gold down less than 0.1%. West Texas Intermediate crude up 3.2%. 113.88 a barrel on WTI. Well, as for the market outlook and the earnings backdrop, Alicia Levine is head of equities and capital markets advisory at Bank of New York Mellon.
The question is, if earnings are moving lower because the real economy is slowing, and let's face it, you don't have to call it a recession. A slowdown is enough to bring earnings lower. That's what the market's going to trade on. If earnings are going to move lower, then the market's going to find another foot lower from here before it can really stabilize.
Airline stocks rallying today. Delta cutting flights just ahead of the busy Memorial Day weekend and through the summer travel season to help it recover faster from bad weather, higher than expected worker absences, and other issues that have rattled recent operations. And Southwest raising its guidance for second quarter operating revenue, citing strong travel demand even in the face of inflation. Right now, Delta shares up 6.7%, Southwest up 6.4%, UAL up 7.5%, American Airlines up 7.4%, JetBlue up by 3.8%. Recapping, 10-year yield 2.75%, S&P up 79, up 2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Charlie mentioning shares of Tesla and Twitter. Twitter, by the way, up about 5.7% in today's session. I got to say, Elon Musk, once again, keeping us on our toes this week and really just rather busy again when it comes to his pursuit of Twitter.
Yeah, I'm just glad I don't have my phone set to buzz every time he tweets because people who report on Elon Musk must have to do that, and that's been pretty busy of late. We've got with us Tom Maloney, editor for Bloomberg News. He's with us in the Bloomberg Interactive Brokers Studio. He's, among his latest stories, the Twitter bid dropping the margin loan but needs more cash. Tom, we saw the headlines cross late yesterday. What exactly does this mean for Elon Musk's pursuit of Twitter?
Well, basically, it means that he's no longer relying on his Tesla stake for this margin loan that was originally part of his bid for Twitter. So that margin loan was originally $12.5 billion. He found some additional investors earlier this month, which dropped that margin loan in half, and now he's eliminated it entirely.
Is that because of the decline of the share price of Tesla that we've seen over the last few months?
Well, that doesn't help. Certainly, I think as Tesla is down about 40% since he originally announced his interest in Twitter. Wow. And that means that, he still had enough Tesla shares to collateralize the reduced margin loan.
Right.
But it gave him kind of less freedom. He would have had, the vast majority of his Tesla stake locked up for margin loans at that point. So now he does need to raise additional cash, and it's unclear at this point whether he's got additional investors coming in, or whether he's going to be putting in that additional cash himself.
I feel like, to some extent, when it comes to financing a deal of this magnitude, I mean, stuff like this goes on, but we don't normally hear about it minute to minute, day to day. And is that the difference, that we're just, right? Like when a company's pursuing somebody, they're either talking with bankers and they're trying to figure out how do we do this, and there's probably multiple scenarios. We're just getting to see it all in real time, or is there something unique to how Elon is approaching this, especially when it comes to financing?
No, I think you're right. The financing of these kind of deals does tend to be in flux leading up to them. I think what's different here is you have a huge company like Tesla, and its value is moving around in conjunction with the value of Twitter, and that's unusual. And that's because, obviously, Musk is the founder and CEO of Tesla, but he was also using his Tesla stake to bankroll his Twitter bid, and so that's kind of unusual as well.
So what ultimately happens here with the possibility that he buys Twitter? Is he able to use this, the decline in the markets that we've seen, and maybe the increase in funding that he's received from other investors, to put pressure on Twitter to lower the price to get a deal done?
Well, look, Twitter is up about 6% today, as you said at the start, but that's still a long way from I think it's at 39 now, and the offering price that Musk had is, of course, 54.20. So I guess the market thinks that the deal is still unlikely to be done on those terms. I think that there is a lot of potential for the deal to get renegotiated at a lower price because the market is down a lot. And we'll just have to wait and see.
I mean, is this just Elon being kind of brilliant in some ways and just trying to figure out his own kind of personal exposure and Tesla exposure? And as the longer this goes on, he's kind of lining up either more. Is that, like, is it getting...
He's de-risking it to a certain extent.
And becoming a better deal for him?
He is, and look, that might have been the intention all along. It might have been, I have the Tesla stake, which I can use, but I'm going to be looking for equity investors as this goes along. And it's just played out exactly as he expected. He's got those additional equity investors and he's reducing that margin loan. Maybe that was the plan all along, or maybe the Tesla drop kind of shocked him and he's reacting to it. We don't really know.
So I mentioned that the news crossed yesterday. Carol and I were wrapping up our program in Las Vegas when we saw these headlines. What are the filings we need to keep an eye on? What are the headlines we need to keep an eye on to get an understanding of the way that this deal could be changing again in real time? Because we don't oftentimes see it play out in public like this.
We want to know when we can stick a fork in it and call it done.
Well, the last part I don't know, but I think we're going to be looking for updates to the equity commitment letter to see whether he's gotten more external investors. We know people like Larry Ellison, groups like Sequoia, Binance were investors in the deal before. Has he gotten new people in? A new Tesla proxy, I'm looking forward to seeing that, to see how many shares exactly of Tesla he has pledged, whether there's any change to that. Those are the big ones, I think.
Jack Dorsey off the board, does that mean he could be... You're smiling, just got about 20 seconds. What is it like? I mean... does it mean that he could be somehow more of an investor in this process, or
no,
what?
I think we knew that was coming.
Okay.
I mean, look, Musk said he would have liked Dorsey to stick around, but, Jack's got his own stuff that he's working on.
Yeah.
I don't think that really changes too much by himself, but we'll see.
Well, it's keeping us busy, that's for sure. Thank you so much. Tom Maloney, he's editor at Bloomberg News here in our broker studio, Interactive Broker Studio.
Let's go to Washington, D.C. now for an update of world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Texas authorities are facing criticism for their handling of the attack on an elementary school in Uvalde, Texas. This afternoon, they explained the suspect walked right into the school unchallenged through an open door and began firing, eventually killing 19 students and 2 teachers. Victor Escalon of the Texas Department of Public Safety says the officers who initially responded were taking on gunfire from the suspect while waiting for backup.
There's a lot going on, a lot complex situation. They're measuring. Approximately an hour later, U.S. Border Patrol tactical teams arrive. They make entry, shoot and kill the suspect.
Escalon says officers did try to negotiate with the shooter, but he never responded. A state appeals court has ruled that former President Donald Trump must answer questions under oath in New York State's civil investigation into his business practices. An appeals court has upheld an earlier ruling enforcing subpoenas for Trump and his 2 eldest children to testify. Actor Ray Liotta is dead at the age of 67. The actor reportedly passed away in his sleep in the Dominican Republic while shooting a movie called Dangerous Waters. Liotta is best known for his role in the classic film Goodfellas, where he played mobster Henry Hill.
You know, we always called each other Goodfellas. Like you'd say to somebody, you're gonna like this guy, he's all right. He's a good fella, he's one of us.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
You haven't seen Goodfellas?
I haven't. I
Are
know.
you
There's.
kidding? I actually
guess
read
it's
the
my
book too that
homework
it was
this
based
weekend.
on.
I know. There are a lot of classics that I haven't seen.
Have you seen Independence Day?
Oh, yeah. But that was like one of my childhood
Silence
movies.
of the Lambs?
I have not seen Silence of the Lambs.
All right.
Is that going to be too scary for
Top
me?
Gun?
Of course I've seen Top Gun. Yeah, you know I love planes, and I do want to see the new Top Gun.
Have you
We're going
seen
to do
Grease?
a story about Top Gun later.
Have you seen Grease?
Yes, I've seen Grease.
Okay, I'm just checking. We're trying to
This is a
decide.
really interesting sort of sample
it's
of classic
You know,
movies.
this is the interview I didn't do with you before deciding whether or not you could be my co-host.
Can I still be your co-host after these questions?
It's a little sketchy right now. All right, so let's talk about job offers. This story by Kurt Wagner. God, it's a tough one. So we're just going to read it. Last Thursday, a tech worker in Palo Alto woke up in the morning thinking that in just 4 days he'd start his dream job. The man had recently accepted an offer from Twitter for a media partnerships position based out of an office in Mexico. And he did a lot of things to get ready for this new job.
Yeah, he did what anyone would do after landing their dream job. He quit his job in the Bay Area, gave up the lease that he had in Palo Alto, arranged 6 months of temporary housing in Mexico City. That afternoon, though, he got a call from Twitter HR. He thought it was about the delivery of a new company-issued laptop. Instead, Carol, the rep on the phone told him his job offer was being rescinded due to the company's, quote, current situation.
Oh, my God. So here's what the guy said. My whole world just got destroyed in 25 seconds. He asked not to be identified and talking with our Kurt Wagner, citing concerns over future job prospects. But the quote goes on, it wasn't just any random job. I celebrated. I called my dad. He said that before getting the offer, he had been applying to work at Twitter for years.
The current situation, in quotes, is at Twitter is not good. We've talked about this throughout the last few weeks. The company is bracing for a takeover from Elon Musk, $44 billion deal. He's set to acquire the company. It was approved by the board. It's still far from closing. In the interim, though, Carol, Musk has been openly criticizing the product, its executive, and its business. At times, it's looked like Musk wants to torpedo his own deal, and many Twitter employees have been vocal about their disdain for the billionaire.
Twitter says that Twitter is still reviewing all extended job offers, so there could be more. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks are gaining into the close at or near session highs right now, with the S&P up 88, higher now by 2.2%. The Dow's up 589, up 1.8%. Nasdaq up 328, up by 2.9%. Broad-based gains. The Russell 2000 index of small-cap shares up now by 3.1%. So it's a risk-on day. Stocks continue to rebound from the lowest levels in over a year. The solid outlooks from retailers bolsters confidence in the economy despite supply chain snags and inflationary pressures. Macy's case in point after earnings, surging now by 19.1%. 10-year yield 2.75%. Spot gold lower by less than 0.1%, down 79 cents the ounce to $18.52. West Texas Intermediate crude up 3.4%, $114.04 a barrel. Recapping, S&P up 2.3%. The Dow up 1.9%. Nasdaq rallying into the close up by 2.9%. Lots of earnings after the bell. Among those names, Gap, Costco, Dell, Workday, Zscaler, Autodesk, and American Eagle Outfitters. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
After a gunman killed 19 children and 2 educators at a Texas elementary school this week, Americans responded with grief and anger. As the collective shock subsides, however, it needs to give way to purposeful outrage. After all, no other country in the world has persistent mass shootings like this. And most Americans support passing common-sense gun safety laws. From time to time, Congress has come close to acting, then failed to. This is a dereliction of duty. Voters should marshal their anger and direct it against politicians and interests who have persistently blocked reasonable reforms. The U.S. is not yet at the point where mass shootings fail to elicit shock, sadness, and outrage. But that's not much comfort, especially when the steps we can take to prevent another massacre are so manifestly before us. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we are just about 10 and a half minutes left in today's trading session. It is time to drive to the close, and we've got a good guest who's going to give us some specific names that he's interested in.
Max Wasserman is the founder and a senior portfolio manager at Miramar Capital. Max joining us this afternoon on the phone from Northbrook, Illinois. Max, how are you?
I'm doing well, thank you.
Well, before we get to some of the picks that you have, I just want to get your take on the markets and what we're seeing right now. 2 days in a row of gains for the indices. Are we out of the woods?
I don't think necessarily we're out of the woods, but I think we're trying to find a bottom.
Okay.
And with the Federal Reserve released some notes the other day and basically didn't surprise anyone on the downside, meaning they're not giving any shockers. So that helped. And also, I think with some of the retail numbers that came out, Dollar General, Dollar Store, basically coming out and saying that the consumer's not dead. With an oversold market, I think you're getting some life.
So you think it's oversold?
I think the market's a little oversold right now. The negativity is so pervasive that when you have any negative news come out and the market starts to rally, that's usually a good sign that we're trying to find a bottom. And I think we're like in the 7th inning. If you would, baseball analogy of a bottom.
So much can happen in those final innings, though.
I mean, that sounds
just going to say.
But entertaining.
I mean, Max, you sound really optimistic.
Well, I think when you know what the problem is, that's a big step in the right direction. Where before, the Federal Reserve didn't have a clue where the problem was. They thought, inflation was transitory. They felt that they could take a lackadaisical approach on raising interest rates, supply chains, all these issues we really know about. It's just addressing them and working through it. So I think, yeah, I'm optimistic in the long term. It doesn't mean, like Harold mentioned, you could get it more downside, and we could see another 5 to 7% on the downside. But we think we're through the majority of the problem. I mean, it's been a bad market. I mean, the NASDAQ was down 30%, and the S&P was close to down 20%. It could still go further, but we're not bailing on this market at this point.
I'm just going to another sports. I'm talking about football. Have you ever seen Tom Brady pull out a game in the last quarter or the last few minutes? I mean, it's pretty remarkable. So much can happen in so many different ways. Volume is something, and I can't remember whether it was Randy Watts or another guest who brought in that what we tend to see, though, is not the volume conviction behind an up day. It's not there. And I'm looking at one of the metrics on the Bloomberg in terms of volume on the New York Stock Exchange, and it looks like we're down again. So that there's not necessarily, even though it's a broad-based rally, it's not like a lot of investors are jumping in on this.
No, I don't think they are. In fact, when you come into a holiday weekend, you're going to have even less volume activity. But I think what you're starting to see, though, is you're trying to find the retailers find a bottom. I mean, whether you take a Target, a Walmart, or even a Costco, you're trying to find out where the bottom is. And you're starting to see that. You can still go lower. I mean, we all know emotions can take you. We know the Fed could surprise at some point and raise interest rates 75 to 100 basis points where somebody's not expecting it. That being said, to be super negative at this particular juncture, I'm not sure it serves the purpose because we know the interest rates are going up. We know inflation's here. We know we have supply constraints, but they're being addressed. I think we just have to work through this excess in the market, and I think we're doing that.
Okay, let's talk about some of the individual stock picks that you have because you got some really interesting ones. I want to start with UPS. Why are you bullish on UPS?
I think we're dividend growth. We like a lot of companies that are paying above average dividend, growing it, good multiple. So UPS has been able to make a return on capital of about 30%. And they've been really able to profit in the last mile of delivery. You take that along with the fact that trailing earnings are about 14 times, forward earnings about 15 times right now, paying a 3.4% dividend. They increased the dividend 49% in the past year, and they increased the buyback by up to $2 billion in stock. So it has all the fundamentals. We think it's in the right place, and when people are shopping, they're still using UPS.
Max. Fundamentals, though. Is it really fundamentals when we're talking about buybacks and dividend growth versus maybe investing in the business or hiring more? You know what I'm saying?
Sure.
I hear what you're saying. And what's interesting is we've had a lot of guests coming on who are looking at stocks that are paying dividends. And to me, that is a little bit more of a safer play that you know you're going to get that dividend no matter what the share price does and no matter what the environment does.
Well, we've been a consistent dividend grower. It's not like lately we've been doing it.
No, I know.
The firm has been. But look at the fact that they were able to raise the dividend 49%. That's a big thing. That's a cash flow. They have a new CEO, and she's been able to really focus on profitability. So they're handling package. They've increased prices by about 10%. So they're being able to handle some of the inflation. That doesn't mean there's not problems in the fundamentals facing the whole industry. But again, we're looking long-term on these stocks. And when I look at the risk-reward of a stock of this caliber, paying the dividend the way they did, increasing it, having a return on capital of about 30%, I don't mind holding a company like this when it's below market multiple and paying such a strong dividend. So, yes, it's going to be a while, but these are the type of companies when the economy gets better, they really benefit. And it has some defensive capabilities in the fact that it's trading below the market, and it's giving you a lot more yield. So we like that part. And they're very profitable. So to us, it's a tough market, but this is the type of company we want to hold out in.
Okay, what about VF Corp? This is a company that makes the North Face, Vans, Timberland, Supreme. Why are you optimistic on VF Corp?
Well, we're optimistic more now. I mean, the stock was about $85 on a 12-month basis. And now it's down to like in the mid-40s, right? It's 48 today. It's up 3. It's paying you about a 4.2% dividend. It's a dividend aristocrat. And their business has been growing very strong. It's just in China where they've been having some weakness in the Vans line. If you look at it from their perspective, they've been able to get rid of the inventory at pretty much 90% of full price, which is really good. And the gross margins they just reported, they only had to decrease in the operating margin by like 50 basis points. So here's another company that's trading at 13 times earnings. It's in the apparel outdoor wear, which is a $500 billion industry. They own 2% of it, like $11 billion in revenue. And we think they have the potential as everybody starts to travel and they go out and they spend more. So the fact is, we're recommending the stock. It's been already hammered from the 80s down.
Right.
So we think the risk reward at this price, again here, is asymmetrical. We think we could see a lot more upside as the economy and people start traveling and buying. We know they have problems, but they just came out and reiterated the cash flow, and they just reiterated the earnings. So at this time, at 48, downside, we think it's there.
All right, got to run. Hey, Max, thank you so much. Max Wasserman, he's founder and senior portfolio manager at the independent private registered investment advisory firm Miramar Capital, joining us on the phone from Northbrook, Illinois. We're pretty much just off our best levels of the session, up 1.6% on the Dow, almost 2% higher on the S&P, the NASDAQ, the outperformer, up about 2.7%. Time to head over to our TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Kriti Gupta in for Taylor Riggs. We're counting you down to the closing bell on this Thursday afternoon, here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic, fresh off their latest vacation in Las Vegas. We welcome our audiences across Bloomberg Television, Radio, and YouTube. And Carol, we started off a little slow, but we picked up some momentum earlier in the session, and it looks like stocks are going to hold on to most of these gains into the close.
Yeah, absolutely. But it does feel like investors are throwing a lot of money at everything, and I do wonder about it. I feel like volume's a little bit light today, and even Chinese names that trade in the United States, talk about some outperformance. They're up about 7.5%, despite the concerns about growth in that economy, despite the COVID concerns. So I don't know. We'll have to see how we end up tomorrow and see whether or not this momentum continues, Tim.
Well, we just spoke to Max Wasserman, the founder and senior portfolio manager at Miramar Capital out of Northbrook, Illinois. He said, we're not quite out of the woods, but this is a market that's looking for its bottom. He said it's a little...
Seventh inning, did he say?
Yeah, he said it's the seventh inning, and he's optimistic. He said the market's a little oversold, but we could see another 5 to 7% on the downside, and it could go further, but he's not bailing on it at this point.
Because are we like oversold on some of those technical indicators? A lot of them have been showing we aren't as yet. And meanwhile, Citigroup is saying, look, maybe go bottom fishing, buying the dip, but do it elsewhere. Do it in Europe, do it in the emerging markets, rather than perhaps evaluations here in the US.
But you know, Caroline, the phrase that I absolutely adore that Romaine actually brought up earlier is seller's exhaustion. How much of this is buying the dip with conviction as opposed to just saying, throwing your hands up in the air and saying, you know what, I don't care anymore. I can't sell anymore.
All right, well, we're seeing a lot of buying activity here on the day, and we get the closing bells and setting up for back-to-back gains on the major indices. Only the second time that we've seen that this month, at least for the S&P 500 and the NASDAQ 100. As far as the NASDAQ composite, that's higher by about 2.6% here on the day. The Dow Jones Industrial Average going to finish higher by more than 500 points, or 1.6%. The S&P 500 higher by about 2% here on the day to close out the day, and a lot of that, of course, is because of those discretionary names here. All 60 names in that S&P 500 Consumer Discretionary Index higher on the day. That as a group of 5%. And that cyclical trade still getting a little bit of an embrace here. You look at the Russell 2000, going to finish the day higher by about 2.2%. And we never really talk about it. I just point out here, Carol, that the S&P 400 mid-cap index also higher by about 2.3%.
Yeah, it does. Again, going back to it, just feels like, investors were willing to really enter into the market on all different levels today. Just the S&P 500, and we'll get into some of the specific sectors, but 451 names in the index higher today, 53 lower. So, Kriti, we definitely saw investors willing to place bets in a lot of places today.
Place bets in a lot of places, but take a look this on a sector action, because it is fascinating what you're seeing. We were just talking about NVIDIA a few moments ago on Bloomberg Television, and take a look at what is the best performing sector. It's those auto components indexes, semiconductors really getting their message. NVIDIA, of course, the heavyweight, driving perhaps some of the gains that you're seeing in the stock market. And you can see this is a fairly broad rally. Retailers, of course, coming in second. The story with Macy's, with Nordstrom, even with Dollar General, really helping that as well. But like I said, this is a broad rally, and on the surface of it, I would say this actually looks healthy. But then you look at the volatility, you look at the margin of the move, and you say, well, hold on a second, is this sustainable? Let me quickly point out the only sector in the red is going to be real estate, and that, of course, is going to be marginally a yield story. If you don't see the bond market move much, that's a sector that isn't going to move much either.
All right, so Kriti has the sectors. I'm going to get to some of the individual names. There were a lot of gainers to choose from today, but I'm going to stick with one of the major themes today that really propped up the market, and we're talking about retail in particular. Caroline, a great interview with the CEO of Macy's, and Macy's was definitely one of the outperformers, up about 19% at the close today, raising its profit forecast as U.S. consumers keep spending despite the highest inflation in 4 days. Remain pointed this out. I mean, their same-store sales did miss the average analyst estimate, but nonetheless, investors pouring a lot of money on some of the optimism we got from that. We also talked a lot about Dollar Tree, right? That's the lower end, if you will, in terms of consumers who tend to shop at these deep discount retailers. This name, top in the NASDAQ 100, top in the S&P 500, Dollar Tree and Dollar General, both posting stronger than expected quarterly results, raising their sales forecast. So again, Dollar Tree up almost 22%. And then I wanted to mention a Chinese name, because Baidu also coming out with their results first quarter. It was a name that was top in the NASDAQ 100. Their first quarter results, surprisingly, sales beating estimates. You know, they've been looking to expand in other areas, particularly as some of those weak ad sales in China have been hurt by lockdowns and COVID and so on and so forth. But nonetheless, shares of Baidu up about 14% in today's trade, Tim.
Yeah, all three of those gainers that you have at double digits. It was a difficult task actually finding decliners today. In the S&P 500, the worst performer on a percentage basis, Kraft Heinz, finishing the day down by more than 7% today. UBS downgraded it to sell, saying that the company faces high inflationary pressures over the coming year. Arguably higher risk, UBS said, if consumers start to trade down to private label as they're facing inflationary pressure. The company also did say it received notice that funds affiliated with its second largest shareholder, that would be 3G Capital, distributed about 88 million shares of Kraft Heinz to external investors, so that also put pressure on Kraft Heinz today. Snowflake shares falling 4.5%. It actually fell as much as 15.6% earlier in the session, fell below its IPO price of $120, but did close above that at $126.80. The company late yesterday issued a sales forecast that signaled lower growth for a second consecutive year. At least 6 firms cut their price targets, Caroline, on Snowflake after the results. And then I wanted to get in the medical products company Medtronic. It reported revenue for the fourth quarter that missed consensus expectations, finished the day down by 5.8%.
Keeping it broad-based in terms of our decliners. Let's have a quick look at what was declining in the FX world, because this was a risk-on rally. It was harder to find your fallers on the stock market, and if you're looking at the G10 currencies, well, there's only one real one to go in for, and it's the Bloomberg Dollar Index weakening by 0.25%. This is we perhaps see a change up in month-end flows, but we also see, of course, what's happening in terms of less need for a haven. Instead, money pulls into the euro. We're up 0.4%, maybe some strengthening there as we anticipate more hawkish ECB. We're also seeing the Canadian dollar, the loonie, strengthening by 0.3%. This on the back of what is a commodities rally, first and foremost. Again, on our hands, a sea of green as we see WTI crude up more than 3%. This is, we once again worry about stockpiles here in the US, worry about the supply side amid the ongoing demand here in the US, and $117 for Brent crude, we're up almost 3%. We had some worries about the metal prices, the zinc and the copper, and in European trading times as we worried more about the Chinese economy there. But actually zinc managed to stage a bit of a rally, up 0.8%, steel up more than 2%. And really a move out of the haven that is sovereign bonds, Romain.
Yeah, out of sovereign bonds. And you talk about sovereign bonds here in the U.S. We didn't get a chance to talk to Stephen Whiting about this, but I was curious kind of about the idea of whether yields have peaked here. You take a look at where we've been. We've kind of been hovering right around these levels now for the last few days. Your 2-year basically unchanged, your 10-year basically unchanged, your 20-year basically unchanged. We did see some activity in that 30-year, and of course we had a 7-year auction that brought a lot of buyers back, of course, into this market, something that we haven't seen in this quite some time. In fact, 2.5 basis points above the when issued, Carol, here. So a little bit of activity going on right now with the people buying treasuries for a change.
Just to continue banging this consumer drum and an outperformance, we're seeing Ulta Beauty boosting its full-year earnings per share forecast, beating overall estimates. So raising the outlook for 2022, their operating margin looking good, 14.1 to 14.4% versus previously seeing it maxing out at 14%. The first quarter like-for-like sales up 18%, well above the estimates of 7.7%. People are clearly choosing to treat themselves, spend on their faces, on going out, as we were just hearing from Macy's as well, people wanting to go out, this pent-up sort of revenge spending. So overall, a record first quarter for Ulta, yet another show that maybe Walmart and Target weren't just dictating the rest of the retail space.
Well, and it's interesting, you know, we often hear about this even when there's tougher economic times, that people, if they're limited in what they spend, they'll spend on a lipstick or something. We certainly hear that from players in this space because it's kind of a manageable item in terms of cost that they might just buy one thing. I will say, though, what's interesting, too, Ulta has been trading higher leading into this. The last 2 days, it's up about 10%. So there's been some significant upward momentum. And then, of course, getting a big boost as we speak, the stock. How much is it up now? It was up about 8-9%, and it's right now up about 10.5% in the after hours.
Yeah, the company's CEO, Dave Kimball, is saying, quote, solid execution of our strategies paired with strong guest demand fueled our financial performance, continued market share gains. The company said that he said that the company delighted its guests with exciting brand launches, with a one-of-a-kind assortment and differentiated guest experiences. That experiences part, a key there, differentiating what you can do in stores versus online, and actually getting people to go in and try things.
Yeah, but it'd be interesting. I mean, again, you talk about sort of why we don't see this a little bit more broad-based across some of these companies actually getting far-fetched earnings right now. So if you're going to buy occasion wear, that would seem like the place to do it. Those shares lower on the back of a little bit of a miss. And then you talk about business spending. We got the Workday earnings. We got Autodesk earnings as well. The idea that business spending would sort of remain resilient here. And you got a little bit of softness there. I mean, they did sort of meet some expectations, specifically with Workday. But the question is you don't knock it out of the park in the same way that, say, an Ulta Beauty knocks it out of the park, and investors then sort of head for the hills.
Yeah, Farfetch down about 11%. I also do wonder, too, Romaine, I think people want to go back to stores. I think they want to go in and experience it. And I think...
No.
Yeah, I do. I think after spending a lot
Romaine
of
doesn't, but you should hear Kriti's story about Nordstrom having to call out her name on a tannoy.
What is this you're holding up?
That's the unicorn that we brought back. I told you asked if I bought a hat. We brought a unicorn back.
Oh, okay. Great.
Unicorns still exist. They are real.
I mean, they're just horses with horns, right?
No, they're not horses with... No. All right, forget it. All right, we got to run. That's going to do
Shout out to This American Life, I think.
Exactly. All right, that's going to do it for our cross-platform coverage. Radio, TV, YouTube, we do it all. We call it Beyond the Bell. We will see you again, same time, same place. We're going to wrap up the week tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's the swag that we get at things. These are some
Didn't even have time for a good meal. Just had time to grab a unicorn. It was a quick trip. It was a great trip, though. Hey, lots of earnings that we're getting, Carol. Ulta Beauty just exceeding expectations, up more than 9% in the after hours.
Yeah, I think there's something to it in terms of we see a lot of retail people are out there maybe spending on stuff again, right? And it's not just about home. It's also experiences. We talk about it. We did mention Farfetch, too, though. That's down almost 9% in the after hours following earnings.
Let's get to world and national news. Nancy Lyons is in Washington, D.C. Hey, Nance.
Thanks, Tim. A Texas law enforcement official says the 18-year-old gunman who slaughtered 21 people at an elementary school entered the building unobstructed through a door that was apparently unlocked. He then engaged in a gunfight with officers 4 minutes later.
Multiple rounds, numerous rounds are discharged in the school.
Victor Escalon of the Texas Department of Public Safety says that's when officers backed off and waited for backup. Some have questioned why it took between 40 minutes and an hour before the gunman was killed. Escalon says they're still reviewing the timeline. We're just learning that President Biden and First Lady Jill Biden plan to visit the community on Sunday. The Senate is working to find some sort of compromise on gun safety laws in light of the recent shootings in Uvalde and Buffalo. We hear more from Bloomberg's Irv Chapman.
Majority Leader Chuck Schumer is not optimistic.
We are prepared to have an honest and realistic negotiation for a little more time. The issue is so important, so raw, that we must pursue that opportunity.
Texas Republican John Cornyn said he'd co-sponsored related bills, including on mental health.
I'm eager to see whether there are any gaps that might have done something to make this attack less likely, that might have actually even prevented this attack from taking place. And I look forward to participating in those discussions.
One proposal would allow a court to take weapons away from individuals deemed to pose a danger. In Washington, Irv Chapman, Bloomberg Radio.
Actor Ray Liotta has died at the age of 67. He is known for his roles in Goodfellas and Field of Dreams. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. We are at the tail end of earnings, but we've been hearing from a lot of retailers and just some other companies. And we do want to mention Ulta. It is up about 6-7% here in the after hours, off some of the higher levels we saw initially, a really huge jump right after it reported. And a lot of it has to do with the company's fiscal year EPS outlook, $19.20 to $20.10. The previous estimate, it had seen $18.20 to $18.70. So raising its outlook for fiscal year 2022 when it comes to EPS.
Yeah, it was higher by as much as 14% just minutes ago. The company boosting its EPS and revenue guidance for the full year. Both of those forecasts beating the average analyst estimate. Carol, you mentioned some of those details, some additional ones that we're looking at. Margins here. The company says it sees operating margin at 14.1% to 14.4%. It saw it at 13.7 to 14%. The estimates were for 14.1%.
That's a big deal.
That is a big deal because we're talking so much about how these companies have been squeezed due to higher costs, input costs, higher freight costs.
Yep.
A beauty company certainly sees those higher costs, but it seems like they're able to pass it along to their consumers.
Check out this number, guys. Ulta Beauty first quarter comp sales, looking backwards, up 18%. The estimate was for a rise of 7.7%. So, I mean, this is a company that really looks like it is firing on all cylinders. And again, just a quick check on the stock because we're going to definitely see it move probably in tomorrow's session. It's still up about 7%. Got another one?
Yeah, Workday is one that I'm looking at right now. Workday boosting its subscription revenue forecast for the year, saying that it sees subscription revenue $5.54 billion to $5.56 billion. It did see 5.53. The company's second quarter forecast for subscription revenue, $1.35 billion to $1.36 billion, so coming in line with estimates. Shares of Workday after these results coming out, they were higher earlier. Now they are in after hours down by 7% in the aftermarket. So taking a hit there.
We do want to mention Costco is going to come out, Gap is going to come out. So as soon as they cross, we'll break them down. And Farfetch also out with its results. Disappointment by investors. That stock in the after hours down about 9%. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Plenty of after-the-bell earnings. Gap just clearing the Bloomberg Professional Service now. It has cut its adjusted earnings per share guidance for the full year. That guidance missed the average analyst estimate. Gap shares after hours now plunging by 11%. We heard from security software company Zscaler. It forecast adjusted earnings per share for the fourth quarter. Its guidance did beat the average analyst estimate. After hours, Zscaler, ZS on the ticker there, up by about 7%. Ulta Beauty shares rallying as much as 14% in post-market trading after boosting its earnings per share and revenue guidance for the full year. While retail earnings were front and center today, specifically Macy's. Its stock surged 19.3%. That helped lift sentiment today on Wall Street, with the Dow, the S&P, and NASDAQ all rallying in a risk-on day. The S&P was up 79 points, up 2%. The Dow up 516, up 1.6%. NASDAQ up 305, higher by 2.7%. 10-year yield 2.74%. Spot gold down $2 the ounce to $18.51, down 0.1%. West Texas Intermediate crude oil up 3.3%, $113.98 a barrel on WTI. So again, recapping, stocks rallied today with the S&P up 79, up 2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Among the most read on the Bloomberg today is a story in the New York Times about, and I'm reading from the story, parents of students who were trapped inside Robb Elementary School furiously argued with the police for not storming the school sooner, according to interviews with witnesses who was there on the day of the shooting. And so, of course, we're talking about what happened earlier this week, the tragedy.
We're trying not just to make sense of the tragedy, but also understand where the United States can go from here. We've got a great voice on this. Dr. Marissa Randazzo is Executive Director of Threat Management at ONTIC. She joins us this afternoon from Washington, D.C. She's got a great background serving with the U.S. Secret Service for a decade. She was the agency's chief research psychologist assigned to the National Threat Assessment Center. Also co-directed the Safe School Initiative conducted jointly by the U.S. Secret Service and U.S. Department of Education. Dr. Randazzo, it's good to have you with us. I wish it were under different circumstances. We're trying to understand how this type of thing can be prevented, and we know what is happening politically right now. That's not what we're going to talk about. But what we're going to talk about is real solutions here. And you say it's possible to prevent school shootings. How?
Well, it's absolutely possible to prevent school shootings. I was part of a team that has been studying school shootings since the Columbine attack happened, and we actually went back 25 years, and the Secret Service has continued this research. And I just want to emphasize, school shootings are preventable. We can prevent them because they are thought out and planned out in advance, and because the person who engages in that violence typically tells other people beforehand. So we stand a chance at hearing about someone who's planning for this type of horrific violence before they actually get to that point. And one other important piece is that people who carry out, and students who carry out school shootings in particular, typically do it when they're at a point of feeling desperation. They're at the end of their rope. They may even be actively suicidal, and they see no other way out of their problems, and maybe really just looking to violence as the last solution or the best solution to solve their problems, and commit suicide at the same time often is the case. So the way we prevent this is typically by setting up threat assessment teams and training law enforcement personnel, school personnel, and mental health professionals in this process known as behavioral threat assessment. It was first developed by the Secret Service. It's been adapted for K-12. It's been adapted for higher ed. And even the Department of Defense has concluded this is exactly the tool that works best. It's our best hope going forward.
I mean, this sounds like being kind of an offensive offensive, like being on the offense, right? Looking for the problem areas or problem individuals. Why aren't we set up better? Is it just we still are in a society, even though in the pandemic we talked so much about well-being and mental wellness and, you know, employers being more sympathetic, the whole world kind of getting a better understanding of how it can impact everybody or anyone. Is it just still society's lack of expertise and knowledge when it comes to mental well-being and willing to kind of identify it? Like, what is it that we're not better about this?
I think that that's a big piece of it. And I think the other thing that distracts us is that depression in girls and women looks different than it typically does in boys and men. We're used to kind of the Hollywood script of you're just withdrawing from activities, you're sleeping all day, you're eating a tub of ice cream. For boys and for men, clinical depression actually looks very active. It's anger, it's trigger temper, it's rage. And we miss that. We miss it as school personnel, as law enforcement, pediatricians miss that as a possible symptom of clinical depression. It's part of what attracts some people to extremist ideas in the first place, is feeling like the only legitimate expression of their emotions is hatred. If they were to cry, they'll be made fun of. But if they are angry and seething and full of hate, then they're not made fun of. So part of it is we have an opportunity if we know what to look for, especially in boys and young men.
Marissa, I can't help but think that if these kids did not have access to guns, these things wouldn't happen, because we have mental health issues in countries outside of the United States where it is harder to get a gun, and we do not see mass shootings like this.
That's absolutely the case. We can't deny the fact that the U.S. has really cornered the market on mass shootings. We have so many more than any other similar country with similar mental health problems, stressors, et cetera. But I will tell you at the same time, I have been working in the field of threat assessment for over 25 years. I've been doing research in different types of gun control for even longer than that. And the sides haven't changed, and the divisiveness has only worsened. So what I want us to look at is what can we do right now? And one thing we can do is state legislatures can actually enact these extreme risk protection orders. So I can't remember, 19 or 23 states have them. It's a temporary order, a temporary restraining order separating someone who is planning violence or maybe a risk to themselves from their weapons until they can be stabilized. So that's something we could actually take action on.
Right, we were talking about these red flag, right, types of legislations or moves, if you will. Hey, Dr. Randazzo, we'll come back to you in just a moment. We're going to do a little bit of news, but we're going to come back to Dr. Marissa Randazzo. She's Executive Director of Threat Management at ONTIC, joining
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, we're going to get back to our conversation with the Executive Director of Threat Management at ONTIC. She is Dr. Marissa Rendazzo, and we've been talking about, unfortunately, the latest school shooting, of course, that happened earlier this week, and what can be done. She says that school shootings, these types of shootings, can be prevented.
Just a few minutes, we're going to get back to our conversation with her. First, though, Charlie Pellet, lots of earnings after the bell. I know you're keeping an eye on market moves. What's going on?
I love earnings season. We have got you covered. Lots going on after the close of trading. We begin with Dell Technologies. Plenty of big, well-known names after the bell. Dell reporting quarterly revenue that topped analyst estimates on strong demand for business PCs and networking services, a sign that companies have been modernizing their technology stacks as workers return to the office. Now, Dell shares after hours up now by about 6%. We did hear from Gap. Gap has lowered its forecast for the full fiscal year after first quarter profit missed Wall Street expectations. Shares down now by about 13% in late trading on Gap. Another retailer also reporting moments ago, Costco, third quarter EPS $3.04, estimates for $3.02. Costco shares after hours down now by about 3.4%. And the security software company Zscaler forecast adjusted EPS for the fourth quarter. Its guidance did beat the average analyst estimate. Shares are trading higher after hours by about 7%. Turned out to be an up day on Wall Street. Another up day with the Dow, the S&P, and NASDAQ all advancing from their lowest levels in over a year. As solid outlooks from retailers bolstered confidence in the economy despite supply chain snags and inflationary pressures. Today we had Macy's shares rally by just about 19.3%. 10-year yield 2.73%. So today on Wall Street, the Dow, the S&P, and NASDAQ all advancing into the close. Max Wasserman is founder and senior portfolio manager at Miramar Capital, and he was our guest right here on Bloomberg Business Week.
I don't think necessarily we're out of the woods, but I think we're trying to find a bottom. And with the Federal Reserve released some notes the other day and basically didn't surprise anyone on the downside, meaning they're not giving any shockers. So that helped. And also, I think with some of the retail numbers that came out, Dollar General, Dollar Store, basically coming out and saying that the consumer's not dead. With an oversold market, I think you're getting some life.
So again, we saw a 2% jump today for the S&P 500 index. 10-year yield 2.73%. Spot gold $18.51 the ounce, down now by $1.70. And West Texas Intermediate crude gained 3.5%, $114.25 a barrel on WTI. So recapping, another up day with the S&P 500 index extending its rebound up by 2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, Charlie, thank you so much. We want to get back to our guest. We're talking with Dr. Marissa Rendazzo. She is Executive Director of Threat Management at ONTIC. They are a threat assessment and management services company. She also served with the U.S. Secret Service for a decade, most recently as the agency's chief research psychologist assigned to the National Threat Assessment Center. She's still with us on the phone from Washington, D.C. Dr. Rendazzo, I am curious, first of all, after this shooting that we just got this week, and we've had a couple of shootings, right, in just a short time. I am curious, is your phone ringing off the hook? Are people calling saying, how do we deal with this? What do we do? What's our first step?
Yeah, and actually, for anyone that has a threatening situation, there are a number of things that you can do. First and foremost, go ahead and call local law enforcement. Let them be aware of it. If it is occurring in a school, from a student, from a parent, wherever it's occurring, you can find out if that school has a threat assessment team. Your workplace may well have a threat assessment team or a workplace violence prevention team. These are teams that are trained to handle these situations or to call in outside experts who have the ability to handle those situations. But something that's important to know is when we get a series of these news-grabbing, high-profile events, these horrific acts, it oftentimes prompts an influx of more more threats coming in for a couple of different reasons. One, sometimes hearing something like this, the news about it destabilizes people who are kind of barely keeping things together and may feel like, well, now that's a way out for me. I'm also suicidal, and I could get some notoriety at the same time, for example. It also tends to lower people's threshold for reporting. So a coworker who may have been worried about some behavior they've seen in the workplace may now be much more inclined to bring that forward to their HR department, to their corporate security department, to let them know about their concerns. So people on the receiving end, threat assessment teams, security, law enforcement, are likely going to see an uptick in those threats coming in, both because maybe more threatening behavior is occurring, but also largely because people are much more inclined, I don't want this to happen to me. I've been worried about this situation for a while, and now I'm going to tell someone.
Dr. Randazzo, I'm wondering what, I think a lot of people are turning to lawmakers right now to see what Congress can do to try to create laws that will prevent this. What would you like lawmakers to do?
So on my wish list, first and foremost, I want to get threat assessment training on how to do these threat investigations to every local police department and sheriff's office in the country. Federal law enforcement typically gets this training. Local law enforcement often does not, and yet this is where the threats are being reported. We heard years after the Sandy Hook shooting, when the FBI finally released their full analysis, we heard that the shooter at Sandy Hook Elementary had threatened to do exactly what he ended up doing. It was reported to local law enforcement, and they didn't think there was anything they could do. They didn't have this type of training. So first and foremost, I want to start yesterday and get threat assessment training, threat investigations training to every police department and sheriff's office in the country. Congress can make that happen.
Just got about a minute or so left here. We are curious about the time you spent in the Secret Service and what that was like and how that kind of makes you think about what threats are, what realistic threats are, how that kind of has affected your thinking. And again, just got about a minute or so.
It was a wonderful experience in large part because it showed me firsthand how much we can prevent acts of violence, and often in ways that we don't expect. So Secret Service agents handling active threat cases, people threatening to assassinate, often worked more like social workers to connect with that would-be assassin, to find out what the underlying problem is, to get them off that pathway to violence, and really establish a relationship to get them into care and support. It was fascinating to watch, an incredible mission to be a part of.
Well, so enlightening to have you join us and talk about what we can do and what can be done to really prevent school shootings, something that unfortunately just seems to be a lot more frequent than should be. It shouldn't be happening at all in our society. Dr. Randazzo, thank you so much. Dr. Marissa Randazzo, Executive Director of Threat Management at ONTIC. As I mentioned, they are a threat assessment and management services company, and she was joining us on the phone from Washington, D.C.
Carol, I want to bring you a couple of headlines.
Sure.
Gap shares are lower in after-hours trading after the company did cut its full-year adjusted earnings per share outlook. Shares dropped as much as 15%. They are down now 13.1% in the after-hours.
Yeah, we're seeing certainly a big drop. And then we also had shares of Costco a little bit lower, down about 3.7% following their earnings report as well.
Let's get to world and national news now. For that, we go to Nancy Lyons in Washington, D.C. Hey, Nance.
Thanks, Tim. Secretary of State Antony Blinken says the U.S. is not pushing for China to be severed from the global economy, but he says China cannot be allowed to undermine the world order.
We are not looking for conflict or a new Cold War. To the contrary, we're determined to avoid both. But we will defend and strengthen the international law, agreements, principles, and institutions that maintain peace and security, protect the rights of individuals and sovereign nations, and make it possible for all countries, including the United States and China, to coexist and cooperate.
In his speech today, Blinken said this is a charged moment for the world and diplomacy remains vital. Gun control groups are pushing for action following the school shooting in Texas, which ended with 19 students dead. Shannon Watts with Moms Demand Action spoke at a rally today on Capitol Hill.
We are begging our elected officials to do something, anything, to address America's gun violence crisis.
Watts says 90% of Americans support common sense gun safety laws. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control, including Every Town for Gun Safety. Former President Donald Trump will have to answer questions in a civil investigation underway in New York. That's the ruling of a state appeals court, which means Trump and his two eldest children, Don Jr. and Ivanka, will have to testify in Attorney General Letitia James' probe into the Trump business. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, there is a lot going on, and that's the understatement, certainly of the day of the year, and a lot of heavy stuff. Having said that, among our most read on the Bloomberg is a story that's a little bit lighter. I thought maybe everybody could use a little bit of this.
Yeah, this one's a fun one. Tom Cruise's jet rides paid the U.S. Navy up to $11,374 per hour. The U.S. Navy lending Tom Cruise FA-18 Super Hornets for the new Top Gun movie. Here are the catches, though. The studio paid as much as $11,300 an hour to use the advanced fighter planes. And Cruise, well, he could not touch the controls.
Can't you see it? Okay, we'll do this. Here's the cost.
He's like, just let me fly the plane. Yeah, I'm Maverick after all.
Don't let Cruise touch anything. Mission Impossible star, I'm sure you know, that he is famous for performing his own stunts. Insisted that all the actors portraying pilots on the long-delayed Top Gun Maverick film fly in one of the fighter jets built by Boeing so they could understand what it feels like to be a pilot operating under the strain of immense gravitational forces, right? We always talk about the G-forces in this. Cruise 59 has also flown in a jet for had also flown in a jet for the original Top Gun, which we know was a big hit back in 1986, long time.
Yeah, this has been a long time in the making, this film. A long time in the release. I mean, they shot some of these scenes back in 2018, Carol.
Mm-hmm.
Cruise ended up flying more than a dozen sorties for the new movie, but a Pentagon regulation, it bars non-military personnel from controlling a Defense Department asset other than small arms in training scenarios. That's according to Glenn Roberts, the chief of the Pentagon's Entertainment Media Office. Instead, the actors rode behind F-18 pilots after completing required training at sea on how to eject from the plane in an emergency and how to survive at sea.
So it's like when you were a kid, and you would ride your bike and your friend would be on the back. Like, is that what's going on?
Well, I think it's more like it's a two-seater. Yeah, it's a two-seater, and that's why they used F-18s rather than different planes that were only one-seaters, like an F-35, for example.
Anyway, it's just fascinating, and as we said, it is among the most read on the Bloomberg terminal on this Thursday, May 26th. This is Bloomberg Business Week, and this is Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Plenty of after the bell earnings. We've got you covered. Costco out with earnings per share for the third quarter that did beat the average analyst estimate, but after ours, Costco now down by 2%. Dell Technologies is reporting quarterly revenue that topped analyst estimates on strong demand for business PCs and networking services. Dell after ours up now by 5.1%. Gap has lowered its forecast for the full fiscal year after first quarter profit missed Wall Street expectations. Gap shares now plunging by 13%. Stocks today extended their rebound from the lowest levels in over a year as solid outlooks from retailers bolstered confidence in the economy despite supply chain snags and inflationary pressures. Today, Macy's shares rallied by 19.3%. S&P up 79, a gain of 2%. The Dow up 516, up 1.6%. Nasdaq up 305, up 2.7%. 10-year up 132nd, 10-year yield 2.73%. Spot gold down $1.72 the ounce to $18.51, down 0.1%. West Texas Intermediate crude up 3.5%, 114.17 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Saw a tweet, I think a couple of hours ago on Twitter that says, this year we are on pace to fly the most flights in Zero G's history, beating out our previous record year, which was in 2007.
Matt Goad is the CEO of a Zero Gravity Corporation. He joins us once again, this time via Zoom from New York City. You may recall that Matt joined us just a few months ago, back earlier this year at the Power Players Summit in February. Matt, good to have you with us. How are you?
Hey, nice to hear your guys' voices again. We had such a nice visit last time in Los Angeles at that amazing house.
It was pretty amazing.
That was fun. We did, and it was in person. It wasn't yet in the skies. For people who aren't familiar with Zero G, they offer weightlessness flights aboard modified 727s. Matt, tell us a little bit about the experience because it's different than, let's say, a Blue Origin or a Virgin Galactic because you're on an airplane.
We are, and plus we've been doing this. We've flown, probably 18,000 people since this company started in 2004, including Stephen Hawking and Elon Musk, who was one of our original shareholders, and Richard Branson, and a lot of other people. So we've flown a few more than the others have, and all safely and all loving every second of it. And the best way to describe it is that it is the single most unique thing that you will ever get to do. When you are floating in our cabin and there is nothing below you as far as holding you up or down, or you're upside down and you don't know which way up is or down because the blood is not running to your head, you're in a different place. And the primary difference between what we do and what our friends at Blue and Virgin do is they give you this amazing view. They're taking you up 55, 65 miles, and you're getting to see the Earth from this amazing perspective and experience what's called the overview effect. And in that, you're going to get about 3 minutes of zero-G time, which you really shouldn't waste doing somersaults or chasing Skittles or playing stuff. You should be looking out the window, and then come do our flight, and we'll give you more than twice that amount of time in zero gravity in our plane, and the ability to also learn while you're doing. So very, very different experiences, slightly different price points.
One of the things I think is interesting, too, I mean, I grew up kind of a space kid. My dad worked on the space program years ago when there were a lot of engineers out there and a lot of people who wanted to be engineers. And I was thinking, Tim, we had a conversation with Jitesh Ghai yesterday at Informatica, the chief product officer. He's an engineer, electrical engineer, and just talking about the need for engineers in our society. If you think about the things being built and how they need those kind of people with those kinds of skills. What is it about what you guys offer that might just, create some interest among a younger community when it comes to STEM?
And we're very focused on that. We have our own nonprofit that we have focused on bringing this experience to school kids and others to see that, being in the space industry is uber cool. And when you take that first experience in zero gravity and it kind of hits you that this is not what you ever thought it would be. So we're very interested and involved in bringing this experience via whether it's essay contests in inner city schools or things like that. So this next group of young men and women will have this opportunity to see that there is a very amazing career in space. And as time goes on, the access to space will become more available. And what we talk about now is a dream. And 20 years, we'll have a couple space stations up there that people are going back and forth to do experiments or staying in hotels or filming movies or things like that. And just like today we talk about how cool it is to fly around on jets and things like that. In 20 years, it'll be going to space.
I wonder how much of your business is focused, Matt, on providing entertainment, about $8,000 to $8,500 a pop, versus doing research or perhaps commercial activity, because I know that you can hire it for photo shoots and stuff.
We do. So we have a few different parts of the business. Obviously, the thing that people hear about the most is our consumer business, where for $8,000 you come up and you feel like an astronaut. We train astronauts as well. So you're having the exact same experiences as the astronauts that we train that will be going into space. But that's the least interesting thing that we do. I mean, the most interesting thing we do is really space experiments that make space more accessible, how things would act in space without gravity, whether they're fluid transfers or some things we do biomedically. We did the first printing of a human heart on a 3D printer in zero gravity, and that is now on the space station printing everything. So what we do in research with major universities, University of California, Purdue, MIT, and as well as NASA, and with the advent of the space stations coming along, we will, I think, likely be doing work with them on how things act in that environment, which will help them create these stations that will replace the ISS and we're really excited about it. And we're the platform for them to do it. So that's the most interesting, the most fun thing we do is taking you up and letting you flip and fly and spin and do all these things like you're in space. That is a fun thing. And it is a memorable thing.
All right. So we've just got about a minute or so left. You've got a competition going on. Can you just share it with our audience?
As far as the essay contest?
Yes. The New York Space.
So,
yeah, go ahead.
Yeah. So again, it's a submission for what it would be like and what would beyond zero gravity mean to you, and the winners will obviously get an opportunity to come visit and hang with us on the plane, and we're really excited about it.
Can anybody do that?
Can Carol enter?
Can I enter? Can I maybe under a different name? Would you let me through? I'll use my married name. You won't know who it is.
Yeah, you know what? Listen, give it a shot.
No, listen.
Depends on how your writing is, Carol.
What I think is so interesting, and we've got to run, but Matt, what everything, all the stuff that's going on in terms of space and making it much more accessible, I just think that is so cool, and making it, I don't know whether you call it the democratization of space, but it does feel like we're getting a lot more of that. Is that what were you going to say, Tim?
Well, I'm just wondering, Matt, because you do this around the country. So here in New York, where are you taking off from?
So we are going to be having these very cool trips starting on Saturday. We hop on a helicopter on the west side of Manhattan, fly over to the plane at Newark, jump on the plane, go to zero gravity and helicopter back, and fly over the Statue of Liberty, and kind of a very, very cool experience. So we have a few of those flights going on Saturday and Sunday, and then we'll be back in New York like the week after Labor Day to do it again.
Well, always fun to check in with you and see what you guys are up to. Matt, thank you so much. Matt, of course, is Chief Executive Officer of Zero Gravity Corporation, Zero G, joining us via Zoom in New York City.
I would do this.
I know. You've never done it?
No, I've never done this.
I've never done it. We've got to kind of figure out how to do a story.
Oh, I'm thinking. The wheels are turning.
All right, folks, we're almost there. Got one more trading day in the week. For Tim Stanovic and our whole Bloomberg Business Week team, have a good and safe evening. This is Bloomberg Radio.